I'm here. I forgot to log in. I had to come back.
Choice.com.
Amazon announcing plans to invest $20 billion in Pennsylvania to build high-tech cloud computing and AI campuses across the state, hoping to create over 1,200 jobs. Joining us now, Pennsylvania Governor Josh Shapiro. Is this the biggest ever private investment in Pennsylvania, Governor?
The biggest ever by a factor of 3. And I think it's important to note that this is just an initial investment coming from Amazon of at least $20 billion. So this is going to grow. Pennsylvania is going to be better off. I think America is going to be better off because we're going to win the battle of AI supremacy, and it's going to be done
Supremacy?
right here in the Commonwealth of Pennsylvania.
What?
So since 2010, Amazon
AI
invested 26
supremacy?
billion. So this
That
is
sounds
what's the
racist.
$20 billion we're talking about now, or they've already done that?
With the initial investment here of $20 billion at these 2 sites, and again, it's going to grow. We anticipate creating nearly 10,000 construction jobs, about 1,250 permanent jobs just in these 2 facilities alone. And the Commonwealth is investing in this deal not by providing any funding to Amazon, but actually investing in the workforce. So we've created a nexus between our community colleges in the area, our high schools in the area, to be able to train students, to be able to train folks, to be able to go and work directly in these AI facilities. So this is a win all around. Amazon is going to pay hundreds of millions of dollars in local taxes to support our local police, our local schools, parks and trails, roads and bridges, things that are going to enhance our communities. And I think Pennsylvania is going to be better off for it. This is the biggest private sector investment deal by a factor of 3 in the history of the Commonwealth of Pennsylvania. We got it done here. Pennsylvania is open for business.
Amazon spreads it around a lot. I think you're the 8th on number 8 on the list of states that getting big investments from Amazon. Governor, do you remember
The biggest.
Do you remember when we were going to get some in New York and who did it? I think AOC decided that there shouldn't have been tax breaks or something, that she thought it meant that, I'm trying to figure that it was almost like money being given away to Amazon. Instead, it was just really sort of it was an inducement for the company to come. Have you had to give away the farm to get Amazon to invest in are you subject to criticism from someone like Congressman Cortez? Go ahead.
As I just said a moment ago, the Commonwealth of Pennsylvania did not provide any cash incentives to Amazon here at all. 0. we are investing $10 million in workforce development. And I want to tell you, those dollars are going to our community colleges, those dollars are going to union apprenticeship programs, those dollars are going to other training programs, because we want to make sure our workforce gets the skills they need to be able to work in a facility like this. You know, yesterday I was in Luzerne County with the folks from Amazon making this announcement. This is a community that over time has been hollowed out, that's been desperate for job creation. And we delivered that yesterday, and that was only one of the sites that we announced. Now the important thing is making sure we give the skills to those who live in Luzerne County, love Luzerne County, this rural, wonderful county in Pennsylvania, so they can stay in the community that they love and they can work and be a part of this. Listen, Pennsylvania has a rich tradition when it comes to innovation and when it comes to leading the world. It was the people who went down in the coal mines who created the energy we needed to be able to win battles overseas and to be able to provide for people here at home. It was our blast furnaces and our steel mills that helped create the weaponry that made up the arsenal of democracy. We now face the next big national security test in this nation. And that is, are we going to win the battle of AI supremacy, or are we going to cede the ground to China? I do not want to cede anything to communist China. I want to win here in America. And the way we win here in America is with the hands of Pennsylvania workers, just as we've done throughout our history. So we're investing in Pennsylvania workers. We are thrilled to have Amazon here helping us in this battle of AI supremacy, and there's a whole lot more to come.
I'm reading everywhere in the notes, moderate. I see moderate. They never just call you a Democrat. They always call you a moderate. So there's a couple of things I'd like to get your...
I don't...
Go ahead.
I don't believe in these labels. I believe in common sense governing. You know, I'm the governor of the ultimate swing state in the nation. And by the way, a governor who earned more votes than anybody in the history of Pennsylvania running for governor. I say that not to pat myself on the back, but I say that with purpose. And that is, the only way you earn those votes is by getting, yes, of course, Democratic votes from my party, but also getting a whole lot of votes from independents and Republicans. And I've tried to stay true to that as I've governed. Bring Republicans and Democrats together to get stuff done.
Like, we've heard about some of the hand-wringing in circles about the Democratic Party at this point, so maybe you're a good person to talk about. We could talk about a couple of things. What your preference, whatever is the most pressing issue. We talk about anti-Semitism on college campuses and the way it's being handled with the Trump administration. Then again, I look at what Governor Newsom and this kerfuffle between the governor and some local politicians out there in the Trump administration with the National Guard. I just wonder, and I don't know how you feel about ICE and immigration, but if you had government agents that were at risk and you had some of the things that we've seen happening out in California, would you have called in the National Guard in Pennsylvania? Would you have tried to help what was going on? And then if the president found the need, would you have said it's your fault that all this is happening? I just don't think that's a winning issue. If I was going to give advice to Democrats, I'd say, you're lost in the woods again.
Well, let me say at the top very clearly and very succinctly, violence has no place in our communities, period. No ifs, ands, or buts. There must be order in communities. And by the way, you can have order and you can still allow for peaceful protest. That is the American way. So there is no question violence is unacceptable, period. I think the question you're asking, the underlying issue here is, who is best equipped to create order, to tamp down violence in a community? Look, I'll speak for us here in Pennsylvania. I take very, very seriously the leadership role I have of the Pennsylvania State Police, and that I am the commander-in-chief of the Pennsylvania National Guard. I've deployed our Guards people here inside the boundaries of Pennsylvania after, say, a natural disaster. They do great work. I've also deployed our National Guard troops to the southern border to work with our federal partners to make sure the border is secure. I share that with you because I want you to know we've been involved in both federal and state-run operations. The key to all of that is making sure you have organized communication between the federal government and the state government. I think it's also really important to make sure that our military personnel are not engaged in local law enforcement activities that, quite frankly, they're not trained for, and the doctrine of posse comitatus makes it really something that they should not engage in but for the most extreme circumstances. I think it is important that police in the communities are the ones that are stopping the violence and restoring order. I think it's also not helpful when the leaders of the federal government and state government are pointing fingers at one another. So we focus on making sure that people are safe, first and foremost, that our police have the tools that they need to keep our community safe, that our military, our guards people do the things that they are trained for, and I take my role, my responsibility as a governor quite serious in that space.
Governor, let me just take that a step further. What do you think of what Governor Gavin Newsom is doing right now in California?
Well, I think it is important that the federal and state government in California get on the same page, work together to stop the violence, work together to make sure that those who are sent to the streets to deal with the violence are properly trained, have the skills that they need, and are part of a unified command structure. It's incredibly dangerous to send our troops into a situation where there is not a unified command structure. By the president making this call to federalize the Guard without the permission and without the consultation with the local governor, I think that that creates a situation that is rife for miscommunication and rife for potential conflict. I think what we need to do is turn down the temperature there, stop pointing fingers, make sure the people who have the skills necessary to restore calm and order and deal with violence are the ones on the front lines.
So is the governor right to be suing the federal government for sending in the National Guard?
Look, I think that's a question for Gavin Newsom, and I've not seen his lawsuit. I've not seen the nature of his complaint. I think that's a question for the governor of California. I'm telling you how we do it here in Pennsylvania, how seriously I take my responsibility as commander-in-chief, and how we work together with our federal partners on deployments. I would not want the president coming in here to Pennsylvania and taking our National Guard without consultation with me, the commander-in-chief of the Pennsylvania National Guard. There are ways to facilitate the kind of coordination and communication that's necessary to make sure we have order in our communities and to protect our soldiers, to protect our guards people, to protect our police who are on the front lines.
I know maybe University of Pennsylvania is more within your purview, but I don't know if it's fixed in terms of anti-Semitism. I certainly don't think Harvard's fixed. If things keep happening, I mean, you're living proof of some of the worst things that have happened, but I mean, it's almost, I mean, it's probably more than weekly, but the things that we see in the headlines that are really just beyond the pale in terms of, they're just horrific and horrendous. How would you fix Harvard? Do you think Harvard's fixed at this point? I don't see any evidence that I would feel safe if I were a Jewish student at Harvard. I would not feel safe right now if I went there.
Well, let me say, I'm speaking to you today from a college campus. I'm on Penn State Abington's campus as we conduct this interview. And I will tell you, I think Penn State, largest school in our Commonwealth, has done a wonderful job creating space for students to peacefully protest, but also making sure that hatred and bigotry do not carry the day on a campus, that Jewish students can get to campus free of any sort of anti-Semitic fueled violence, that they're able to live out their time as a student, that the legal responsibilities on a chancellor, on a college president, are upheld. We've seen that at Penn State, and I will tell you that as it relates to the University of Pennsylvania, which I think was part of the top of your question there, I literally just met last week with the president of the University of Pennsylvania, and we continued our conversations in this space. I will tell you, I think they've made a lot of improvements from where they were before. It is incredibly important that every single student on campus, regardless of what they look like, where they come from, who they love, who they pray to, has the ability to go to class, get to their dorm room, and be able to participate in campus life free of violence, free of threats. That is both a legal responsibility here in the Commonwealth of Pennsylvania and across the country, and it's a moral responsibility. And I do think some of the universities got out of whack, especially last year, and they are now correcting for that. And it is important that those corrections continue. As I said before, there is a place in this country for peaceful protest. What there is not a place for is violence. What there is not a place for is chaos on our campuses. What there is not a place for is targeting someone because of how they pray. I think at this moment in time, leaders from governors to university presidents all have a responsibility to speak and act with moral clarity and universally condemn anti-Semitism. When we do not condemn anti-Semitism, when we do not condemn other forms of hatred and bigotry, it leads to the kind of political violence that we've seen throughout this Commonwealth and throughout this country. We saw it in Butler, Pennsylvania with the assassination attempt on Donald Trump's life. And we saw it less than 2 months ago at the governor's residence here in Pennsylvania while my family and I slept. We have got to all stand up, Republicans and Democrats alike, and condemn the voices that are leading to violence in our politics, on our campuses, on our streets of our cities and towns. It is not okay, and we all have to forcefully condemn it, and we have to not create space for it, and we have to not reward political actors who decide to engage in it, period.
Hey, Governor, I'm not going to, I want to say yes to all the things that you just said. I'm not going to ask you about Iowa or anything if you got plane tickets or anything. That's for another conversation, maybe at some point.
Good to be with you guys.
It's 2025. I mean, we got to relax.
It is, but Governor, we'd like to have you back
Yeah, we
to talk
would.
more about
Right.
the business initiatives you're working on.
And everything else. That's right. Governor Shapiro, thank you.
Listen, I'd love to come back on and talk about how Pennsylvania's open for business. We've sped up our permitting time. By the way, we were in the bottom of the pack in the country. We're now in the top of the pack. It's a big reason why Amazon picked Pennsylvania. We've got the best workforce. We've got an abundance of energy, particularly natural gas. We're competing again here in Pennsylvania. I'd love to keep talking about it with you in the future. Thanks so much, guys.
And the Eagles.
Thank you,
and
Governor.
I'm sure you got a lot to talk. Here we go. Governor, thank you.
Go Birds.
Yeah, good. All right. See you
Thank
later.
you.
Fly,
Thanks.
Eagles fly. Anyway, up next, a look at what's moving in the pre-market, and then Wall Street getting ready for key inflation data tomorrow and Thursday. We will break down what's needed for the Fed to cut rates. Squawk Box. We'll be right back.
And welcome back to Squawk Box. I'm Dominic Chu with a look at some of your early morning movers. We're going to start with some big news in entertainment. Disney has agreed to pay CNBC parent company Comcast nearly $440 million for the remainder of its stake in Hulu it doesn't already own. Both of the media giants are actually moving fractionally lower in the pre-market. Disney, you recall, originally announced its plans to buy the 33% stake in Hulu it didn't already own back in 2023 for $8.6 billion. They wanted to take full ownership of the streaming service. This specific payment cleans up a lengthy appraisal process of what the total of Hulu should have been valued at. The final transaction is expected to close at the end of July. Now, for more on this story, be sure to tune in to Squawk on the Street later on this morning at 9:15 a.m. Eastern Time for an exclusive interview with Disney CEO Bob Iger. Let's turn now to technology. Microsoft regaining its title as the market cap king. Shares are slightly lower this morning after hitting an all-time high. The stock is also coming off its 8th straight day worth of gains. Microsoft has been trading places with Apple and Nvidia at the top of the market cap heap for a year now, and you can see that Nvidia is not too far behind, $3.5 to $3.49 trillion. We'll take a look at what happens today. And we're going to end with Novo Nordisk. So shares are up 3% after the Financial Times reported that activist hedge fund Parvis has built a stake in the Danish drug maker. According to the report, Parvis is interested in influencing who the new CEO is going to be. So keep an eye on Novo shares up 2.25%. Becky, I'll send things back over to you guys.
All right, Dom, thank you very much. Up next, how investors should game out the Fed. We've got to look at some rate cut scenarios based on this week's upcoming inflation data. And then Ways and Means Committee Chair Jason Smith meeting with President Trump and CEOs at the White House to talk about the reconciliation bill. He will join us with the latest from Washington. Squawk Box will be right back.
itself to apply.
Wall Street's getting ready for key inflation data tomorrow and Thursday. Steve Leisman joins us now with some scenarios of what the numbers may say and what's needed potentially for the Fed to cut rates. We had someone on earlier that says one more tomorrow and Thursday, one more set of quiet, cool
data might be enough.
Then it hits the fan next month. No, not for rate
Oh,
cuts.
then the tariff. That was Larry McDonald this morning. I heard that. Yeah, it's like
Yeah.
6:30 or something like that.
Yeah.
I think that's an expectation out there. But yesterday, a good precondition for all this, we had improved inflation expectations in an important report from the New York Fed. And that, together with hopes of a contained CPI report tomorrow, could begin to create the conditions for the Fed to cut rates or resume rate cuts later this year. That depends, of course, on what we're just talking about, the impact of tariffs and other Trump policies on prices and jobs. The least likely cutting scenario, if inflation marches higher and unemployment doesn't decline. The most likely, higher unemployment and stable to lower inflation. The worst dilemma for the Fed, higher inflation and higher unemployment. You know what that is. Austin Goolsbee talked about it on our air when he said that's the central bank's worst situation, stagflation, where both sides of the legal mandate get worse at the same time. So I think we'll have to see how big the impacts on prices are. So there are those who think the Fed can cut even amid higher inflation. Here's a grid for you that maybe looks at what the Fed can do. They argue that the Fed should look through any tariff effects, but that's a tough call unless unemployment really shoots up. Stable or lower inflation would enable the Fed to remove, I would say, 50 basis points pretty quickly, or the estimated amount of how restrictive it is here. It could cut as much as 100 if you have inflation heading lower and the unemployment rate either stays stable or rises. So the key right there is that what happens to the inflation rate, the kind of flexibility it gives the Fed to cut and how much. For the year, the market's built in the middle scenario, 50 basis points cuts, 60% probability more or less of one coming in September, another in December. NFIB small business report this morning showing a modest rise in optimism, but the percent of firms charging higher prices and planning to raise prices didn't get worse, but it remains elevated. If tariffs don't show up in the data, it'll be an important step to clearing the way for cuts, but it'll need to continue, I think, Joe, for a couple more months before the Fed can sound the all clear signal.
So why'd Larry McDonald say that we don't see the tariff effect till one more month? I thought we were looking. I thought last month we said one more month.
There was a
gonna be
whiff of it last month. There's a
It
little
wasn't
more.
Larry, it was the other.
Yeah, it was the other guy. Yeah, you said it was a UBS guy.
UBS
wasn't it?
guy, yeah.
Yeah, it was
There's something.
Evan Brown.
There's something the administration said that I don't think is being given enough weight here, which is the idea of relative price movements. We had this whole discussion about elasticity, right? Can you substitute that product or do without it? And if you do pay more for that product, is there another inelastic product or elastic product that I can do without? So the relative prices go down because others went up. And that's the whole sort of aggregate change in prices that we're looking at.
Look, and Liz Everett Chrisberg was here, and she suggested that the data from Bank of America Institute showed that people were loading up on stuff. It wasn't just the retailers who were hoarding things, it was consumers who were buying electronics and cars and trying to get in under the tariff scale.
We reported that when we did the retail monitor the prior month. It's in the data. It's why I keep saying we don't have a true read on this economy until the third quarter, right? You had the negative 0.3 in the first quarter.
So more than
now,
one more.
Atlanta Fed is running 3.8 now, but all that is is a rebound in net trade.
So you think it's more than a month? It's September, October, really, before we're going to see.
I think if you get a couple months of inflation that's cool, the Fed can say, all right, maybe there's stuff, if I look at the data, I do see the tariffs in there, but I see offsets and I see a pretty decent aggregate level of prices not going up. I think the Fed can think about cutting rates in September if we get those things that I was talking about in line.
Meantime, WTI is picking up a little too,
Yeah.
which takes away the lower gas prices that had helping us on the inflation.
I've gotten some cheap gas.
I did 287. I was so proud of myself.
287.
Did you
I know.
do 287?
Cash.
No, this was cash or credit.
Cat.
Well, you're not in New Jersey.
I was coming back from Cape Cod.
You were.
287 in Massachusetts.
And you paid with a credit card?
I paid with a credit card.
Wow.
Was cash cheaper?
This is the things that
Was cash cheaper? Could you have paid
It
cash?
was not a cheaper alternative
Okay.
to cash.
You guys gonna start talking
if
about the
there
weather
wa-
next?
if there was,
we're
would
gonna
you?
get low gas prices.
I am
because of
starting
the
to
weather?
get sick of these 3% credit card charges.
No kidding.
I'm going to carry around a little more cash.
You
Terrible.
guys, I'm gonna pull up 2 rocking chairs on the porch, and you guys are talking
carry-
about that and the weather.
I shouldn't say that on TV.
How about
Did I
the
carry
weather,
a lot-
Joe?
Carry a
How
lot
about the
of-
weather?
I'm like Christy No.
Why?
No, she had her purse had $3,000.
$3,000 in cash. Avoid credit card fees. Nobody said that was the reason it was there.
Steve, thank you.
It's-
Okay.
All right, let's bring in Amy Wu Silverman. She's the head of derivative strategy at RBC Capital Markets. And Amy, the key word for you is volatility. You say your volatility jokes still have some legs here. You want to tell us some?
Yeah, I mean, they're really bad. They'll make my kids cringe, but my
Okay.
favorite.
Dad jokes?
Yeah.
I'm
they're-
listening.
Yeah, I mean, you can use them as dad jokes if
I'm
you
listening.
want. But look, it's this idea that there's this other options Greek out there. It's not delta, gamma, vega. It's tweta. It's the sensitivity of implied volatility to Donald Trump's tweets, and it's kind of a joke, but kind of not, because every portfolio manager out there is managing their portfolio way more to tweta than anything else right now.
Truth Social.
Yeah.
You know, I subscribe to it obviously for market reasons, and the amount of sheer tweeting that you get and how much you have to react to that is something that we all have to think about. And you know, it's interesting because VIX is subdued right now. It's sub 20 handle. But we know those volatility potholes are out there. We saw them April 2nd, we saw them August 5th, and I think the concern is they're really down the road, you know, because I hear you asking about, well, when do we see things hit? Is it September? Is it October? You see that in the term structure of the market, Becky. Like you see that very bearish sentiment rise as soon as we get to that 3-6 month space in options. It's telling you folks are still pretty cautious. They're just not cautious for the near term as we wait and see.
You do say, though, that there is some really promising bullish indicators, especially when you look at small caps for the short term.
Yeah, and it's interesting because I would characterize the market right now as hoping but not hopeful, and these are sort of hoping trades. So I think a lot of the extreme bullishness you're seeing in small caps is one. Likely some part of it is short covering, but the other part is a little bit of a rate sensitivity play, and then a little bit of if tariffs do come out and they are better than expected and you get that resiliency, then you're going to see that right tail in small caps first, and the market doesn't want to get caught whipsawed the way they did during the Liberation Day round trip, and institutional investors really lagged there, and they don't want that to happen again. So they have their thumb on the right side of the scale because they are bearish.
And I liked your description for what happened to investors, institutional investors too. Right after Liberation Day, you say they were basically frozen.
Yeah.
Deer in headlights sort of situation.
You know, it's interesting because a lot of what I do is just try to suss out the sentiment from our clients, which are institutional investors, and it really was like, we'll just wait and see, you know, we'll just see what happens next. And I think what's happened in the last 2 months is they've realized they can't just keep doing that because one, you know, those who de-risked and degrossed, they got caught and didn't get the rally. They missed it. So now that's why I think you see this deployment of, I think they're right tail hedges, but this extreme bullishness in IWM, so the small cap proxy. A lot of this is them saying we've got to do something, even if longer term we're still a little bit more negative, but we can't just simply continue to be frozen in deer in headlights.
You think that's the right bet if you have to make a bet?
I think for now, yes, because what you've seen is one, you know, there is still a little bit of market management by Trump. You know, that tends, I think what we saw was a little bit more towards bond market, but it is there. But the second aspect of it is what we've actually seen investors do is they're going to sectors that are just tariff resilient. So maybe your COGS are not all overseas, maybe you're more services oriented, and we're seeing them deploy those option trades on those sectors rather than say, you know, I'm going to put my finger in the wind and say, this is what I think is going to happen with tariffs. I still don't think people know, and they're watching the negotiations.
So for people watching the macro this week, we're waiting for the inflation numbers, the CPI and the PPI. What are you looking for?
I'm certainly looking at those. What is interesting is, and this was true prior to NFPs last week, is if you actually look at that at the money straddle pricing, so essentially just the magnitude of what the options market is pricing, it's very low. It's pricing almost nothing happening, and I always think that's a little dangerous because again, you got that tweeter risk, you know, that is always in this market as an overhang, and right now it just feels a little complacent, and I think the folks who are going to do something about it, they have their thumb on that right tail hedge.
So there's not big premium in the puts or the calls on the strike price.
Exactly. So it's not sort of saying directionally one way or the other. It's just
Right.
saying overall those premiums are quite
it.
inexpensive.
That's the buy then, because you wouldn't want to sell it.
Yeah. But you know that's what people are doing, Joe.
They're selling them. That's why they're low.
That's
Yeah.
why they're low. That there's a lot of I'd say premium harvesting, volatility suppression related to just people just wanting to collect yield right now as they wait and see. And that's where we kind of find ourselves in this environment.
Can't believe I used to do that with S&Ps. Only I'd sell the calls and the puts. in a month between expiration, I thought I was going to be bankrupt or lose my house, but usually it would end.
It
Usually it
typically
ends
works
right
though, right?
there. Yeah, but you got to have a lot of nerve because it goes both ways.
That is true. You can
Yeah.
hit a pothole if you do it, but it typically, there is a volume.
Many times it's settled right at the strike, and you just have to keep all that. And it was during a period of volatility, so they were both really elevated the premium. But now I just use DraftKings for $5.
Oh, great.
It's a lot better. All right. Thank you.
Thank you.
Coming up next, House Ways and Means Committee Chair Jason Smith joins us with the latest on the reconciliation bill. In his meeting with President Trump and CEOs yesterday, Squawk Box. We'll be right back. President Trump, along with other Capitol Hill leaders and the CEOs of companies like Uber, Dell, Goldman Sachs, met to discuss investing billions of dollars into what the president is calling Trump accounts. The money will go towards children of their companies. Join us now with the details of the meeting. House Ways and Means Chairman, Congressman, or Chairman, Jason Smith. Good to have you on, Mr. Chairman. You having fun
it's
yet?
good to be with you, Joe.
You having fun yet?
Every single day.
I just
is a
need
great
to know
day.
that. Yeah? We can talk about...
Every single day.
I'm not... that's good. People that go into your line of work, they gotta know what they're getting into. I think, and you're doing public service, and eventually, I guess there's a light at the end of the tunnel. Hopefully, not a train coming right at you. At some days, I'm sure you don't know, right?
You don't know, but I always say expect the unexpected, and that's in fact what we've been doing. We've been preparing since I've been chairman of the House Ways and Means Committee for this moment. So over 2.5 years in educating all of my members about the expiring tax provisions and all different aspects of the tax code to help deliver the tax portion of the One Big Beautiful Bill.
You know what? I think you were there yesterday, and I saw everyone. I saw David Solomon and Dara and Michael Dell, and one of the funny lines was to fund these accounts. If you took what Gavin Newsom has spent on that rail, whatever that was, that pipe dream of what they were building, and it's 100 times over budget or something. You could have, I think they said you could have set up health accounts for 40 billion of our children, which we don't have.
That's exactly right. It would have funded for every children and then some, according to the comments that was made yesterday at that roundtable. This is a very small investment that you can do for the future of America to allow them to have ownership in America's economy, where they have an investment fund created when they are born, and they watch it grow. They see the involvement, and being involved with the stock market is extremely important. Roughly 60% of Americans are involved in the stock market. This allows every child that's born from here on out for the next several years, whether that they live on a city block or on a county road, they're treated the same.
This is the likelihood that this comes to fruition. What do you think it is at this point?
It's a priority of President Trump. It has his signature name on it, the Trump investment accounts. I see that we had no problem passing in the House of Representatives. I would expect the Senate would also maintain the president's priorities and help putting it on his desk. It is the right thing to do for families. This tax bill is the right thing to do for pro-growth policies for small businesses. The Senate's going to deliver their side of the agreement.
What do you think is coming back to you from the Senate? If you had to guess, what's it going to look like?
Well, the Senate's having to do the same balancing act that we did in the House. We had to thread a very careful needle, could only lose a couple members. They can only lose a couple senators, but they're dealing with the same dynamics that we had, whether it is the debt and deficit hawks that want to cut more spending, or whether it is people who do not like SALT. Of course, there's not a Republican senator representing a SALT state. That's a dynamic that we had in the House. They also have to look at all the green credits. That's something that creates a lot of interest. Some people want to eliminate every green credit, and others want to use a scalpel approach. So it's all about balance. They have to thread that needle. They can't make fatal changes to the bill that could be a vote issue over in the House, and they know what those fatal changes are.
I wonder how it all plays out, but you're right. And we had Senator Johnson last week, and it reminds me of the way President Trump negotiates sometimes. Everybody stakes out these positions that supposedly, there's going to be no negotiating. But, Mr. Chairman, when it comes down to it, everybody knows what the margin is in the House and what the margin is in the Senate. So no matter where you're sitting and how intractable you seem to be, you think it's finally going to, they know that, and they're finally going to agree on something because it has to be done by July 4th?
Without a doubt, failure is not an option. We're going to make sure that the largest tax increase on America does not happen. We're going to, in fact, make sure that they have the largest tax cut. And we're also going to make sure it's the largest mandatory spending cut in U.S. history and the most significant welfare reforms in U.S. history. These are all things that we can agree on. We're going to get there. Failure is not an option. People want to make some tweaks and changes here and there, but we're going to get it on the president's desk by July 4th.
Chairman Smith, when you say the fatal positions that the senators know, are you talking SALT and Medicaid? Only because we've had a number of Republican senators who have come on here and trashed those positions and said they won't vote for anything that has those positions that the House has sent over in their bill.
The fatal positions are the ones that require 218 in the House and 51 in the Senate. If it takes away from those votes, it's a fatal position. We have the smallest majority in the history of America when you've passed such a razor thin tax bill. And so the water has to be tread very carefully, and they're doing that. I'm very proud of the work that Leader Thune and Chairman Crapo, we've been working hand in glove with them for months now for this moment. They're going to deliver a good product that we can get across the finish line on the president's desk.
But you know the fatal positions. They apparently know the fatal positions. We don't. Which ones are they?
You'll figure that out as the process moves along. But it's very easy. It's like what I said, Becky. Whether you look at SALT, whether you look at the green credits, whether you look at spending cuts with debt and deficit hawks, but also folks that are very sensitive to spending. Those are fatal issues if you go too far in any direction. That's why it's all about balance and just threading that needle.
Well, Trump said something nice about it. I can't remember what he said yesterday about you. Remember what it was
Well,
good.
I appreciate the kind. I told President Trump he can say anything nice about me that he wants to publicly, but he was very, very kind, and I appreciate working with him. He's been a great executive to work alongside with and passing this one big beautiful bill.
All right. Keep us updated. Come back, Chairman Smith. Thank you. Squawk Box, be right back.
And make it count.
All right, let's take a look at how things are shaping up. We've got about a half hour to go till the opening bell on Wall Street. And right now, green arrows, these are some pretty modest advances. But hey, we're in the green. Dow futures up by about 6. S&P futures up by 8. The NASDAQ up by 35. If you check out crypto, last we looked, it was closing in on 110,000. Right now, it's at 109,717. And oil prices have been picking back up, getting a little bit of steam here. You've got WTI back above $65 a barrel at 65.41. Brent is above $67 a barrel, and then you've got natural gas, which is actually giving back by about 1.3%.
God, it's 9 o'clock.
It is. That does it for us today, but we'll be right back here tomorrow. We hope you are too. Right now it's time for Squawk on the Street.
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer and David Faber at Post 9 of the New York Stock Exchange. Stocks do continue their steady grind higher as we get a second day of U.S.-China trade talks in London. Pretty light day for economic data, although small business NFIB sentiment ticks higher for the first time this year, 10-year 4.4. Our roadmap begins with the latest on trade talks. The Commerce Secretary says discussions are going well as the two sides do meet for a second day in London.
Plus, Apple's Developers Conference underwhelming on the AI front, but the iOS software gets its biggest facelift in over a decade. We'll tell you what the street has been saying all about it. And Disney completes its purchase of Hulu, or will soon. It's agreed to pay NBC Universal an additional $439 million to own all of that streaming service. Disney CEO Bob Iger will join us exclusively just a few minutes from now. We'll talk, of course, about what the full Hulu acquisition means for Disney's strategy and a lot of other topics.
Let's begin with the markets, though. Watching developments in London, where U.S.-China trade talks have entered that second day. This is the Commerce Secretary from earlier today talking about progress.
All day yesterday, all day today, let it go. We're spending lots of time together.
Spending lots of time together, he says, Jim.
Yeah, well, Chinese stocks went down at the end of yesterday's session. Of course, our stocks went down at the end of yesterday's session. I think there's just a lot of people who are hopeful, and then the hope's dashed, and they just leave again. I continue to think that when I look at Advanced Micro stock going up, the Advanced Micro has a GPU like NVIDIA, not as powerful. Maybe that's who they're offering. I don't think you can get out of there without giving them semiconductors. David, I don't care what they say, that they can make it all up with packaging and that there's no problem, they've got it all ready. They don't have what we have. And they want it. And boy, do we ever need what they have. And it's really one country needs and the other country.
Rare earths, of course, what we need right now, as I think is what you're referring to clearly for automotive and a number of other industrial
F-35.
uses.
We want that. We
There's
wouldn't like
another
that
one.
fighter jet to work.
And to your point, they want access to, and by the way, Jensen Huang wants them to have access to NVIDIA chips of some kind.
Paris. Yeah, well, he does, because he doesn't have. He just wants to give them the Biden chip. The
H20, which they were, and then they weren't.
Right.
And they took what was originally 5.5. They did roll that back. I think it ended up being what in the quarter $4.5 billion
$4.5. But there's still,
right?
they say there's $50 billion in play.
With the overall market.
Yeah, overall.
That's not like they're going to sell 50 billion
No,
NVIDIA chips.
No, but they're saying that we had 95% of the market a few years ago.
I know, but they don't need more. When you use that
they
$50 billion number, it makes people think, oh, it's a $50 billion loss. It's not of revenues.
No, you see, I was quoting Jensen, who said it was 50 billion. I mean,
it's a $50 billion market.
Right. Well, in play is the same as market.
Opportunity.
Okay, let's agree with opportunity.
So we've got this notion that export controls might be part of the toolkit.
Absolutely.
You got this licensing on their part for some automakers,
right,
for 6 months.
But right now they have. Do you know right now the Europeans have it and the Japanese have it? They gave them. It's just us that are being penalized. Just Ford.
Right. Well, there's a piece on the tape this morning about Hyundai, which apparently, according to Reuters, says everybody's about a year-long stockpile, which is a big deal right now.
Yes. No, I mean, look. I don't think people realize it. I was speaking to an executive at a major auto company who said, listen, we're still playing checkers, they're still playing chess. And when you hear that, you say to yourself, like, is London playing checkers? I mean, I don't know, we're a powerful country, but there's a reserve in Mexico of these rare earth. Never talked about it. It's there. Why don't we go down the shop? Why don't we have like a plan? I think
Last I heard, we're sort of still also negotiating with the Mexican government around trade too. So
well, yeah, but I'm just saying that why isn't there a plan to be able to make it so that we have a strategic petroleum? We have one for Bitcoin. You know?
Yeah, we do.
We do.
We haven't funded it yet, have we?
No, but it's like whoever's stole Bitcoin, we can take it back.
Bitcoin reserve.
Yeah. But I mean, we have the ability to take them on. We have the ability to take the Chinese on. but we didn't think about it ahead of time. It wasn't on the agenda. I mean, I don't like that, okay? I just think if you're going to take on the Chinese, you better have something in your back pocket. Other than like, hey, guys, we've got the AMD latest. Hey, you know what? Here's some Micron. Want some Micron?
Sure. What do you got?
You know, like, I'll give you some MU. I'll give you some high bandwidth. Look, I mean, we're not strong. We're not strong. Other countries are. We should be working with our allies to come up with rare earth, because otherwise what's going to happen is in a year they'll have stolen all of what NVIDIA has. They'll have copied it because that's what they do. And then what do we have? We're back hat in hand.
Right.
Let's be a little... I want to do this right.
That said, Jim, markets within a few points of an all-time high. Forward earnings estimates, 280 is now getting back to all-time highs. Oil's sort of pricing in either constructive trade or good economic activity.
There's a little bit of a disconnect. If I were the CEO of Ford or the CEO of GM, I'd be worried. But most of our companies do not. Most of our companies aren't even reacting anymore to things. I mean, well, Smucker had a bad tariff hit, and we can get into Smucker. But I think that there's a lot of companies that are readjusting, and it turns out that the hit's not as bad. A lot of it is because they're sourcing at different places. Almost none of it's because they're making it here. We can't make this. Go on July 3rd. May I suggest you go to Dollar Tree? Go July 2nd, actually, because it might run out of balloons. You got Dollar Tree there. That stuff, that's not made in Bethlehem, Pennsylvania. Okay, you don't get that. You know, you're not getting that from from Michigan.
No. Let's quickly get to Apple before the break. As you know by now, yesterday's presentation at the Developers Conference unveiled some software updates, including the first significant redesign of its iPhone OS in more than a decade. The event, though, did disappoint some elements of Wall Street. Shares closed lower on the lack of major announcements surrounding AI. Jim, Key calls it disappointing. You think they should buy Perplexity?
Well, look, their policy, and I remember when I suggested Tim Cook to buy Netflix. I've suggested to buy a lot of things.
You
and they weren't
told
good.
everybody to buy all sorts of stuff. What's the problem? Yeah,
I said that Sievert would be out.
you're changing the subject.
Well, because I said.
By the way, that hasn't happened yet, but you're referring, we should make people, to a German report that has Mike Sievert, the fairly long-time CEO now of T-Mobile, potentially stepping down from that role, something that Jim referred to out of nowhere one day a couple of months ago.
We don't know when.
And then he
They're not
just
going to put a
did it
release
again.
out. They're not going to put a release out. It's not done. And I hope he stays because I think he's fantastic.
Okay. You want to get back to Apple?
I thought that Apple had a lot of good things. I don't think that people realize that Apple has such an aversion to buying companies and a great proclivity to say, look, you want our billion, 1.3 billion, we'll take you as our sole sponsor. Now, the sole source. Now, the problem is that Google, one of the things that Google's in big trouble for.
Apple.
Yeah.
Yeah.
What?
Well, we got a picture
Oh,
of Mike
no,
Sievert.
he's
I'm here.
some story that I read. But
I'm here.
Listen, remember, it's not that painful to listen to me, okay? I'll be listening to you with eye roll like one.
Well, you can ask a question.
Okay, Google wrote a check for $20 billion to Apple in 2022.
Every year.
And yes, and this is what the government hates, that they did that. So I would pivot if I were Apple. Instead of saying to Perplexity, you know what? I think that you should pay us. I think they should say, we pay you. Now, that's not what you ever want to hear, right? Right?
You going to keep defending Apple?
You bet I am.
Why?
Okay, because if I were told to move out of China, and so I moved to India, and then it turned out that was the wrong country, oh, sorry. If I gave $500 billion 4 years to build things here, well, that didn't protect me? Sorry. What do you have to... Are you kidding me? Do you think you're the CEO and you're sitting back and saying, you know, we ought to have a radical... Oh, my God, is the India thing working? Well, maybe there's a lot on his mind.
Okay, none of that.
And
that's all very well true.
I'm saying that
I'm
the
just
CEO
talking about whether or not it's worth owning this company's stock at this point.
Yes, and if they buy Perplexity, you'll come to me and you'll say,
Who said they're going to buy Perplexity?
Jim wants them.
The largest deal they've ever done was Beats. $3 billion.
Okay, did the buyback work? Is the buyback working right now? Is the buyback working?
Doesn't feel like it.
Thank you. I rest my case. Okay?
Use the capital on something else.
Yes, that's my point.
All right.
I'm not asking to be all Benioff. I am saying that to buy Perplexity would make it so that you pay $220 right now.
Yeah, we're going to take note of the suggestion, Jim. Meantime, an exclusive, as David mentioned, with Disney's Bob Iger on the company taking full control of Hulu. Amid a torrent of media news actually today. Don't go away.
Did I forget something? You know what? I think I need to go back. I got time. I think I might have forgot something, so I'm going to go back and I'll see you in a bit. I'll be back.
Disney's going to pay Comcast, that's our parent company, at least for a few more months, additional $439 million just to take full control of Hulu. It ends what's been a lengthy appraisal process for the streaming service, of course, of which Comcast once owned as much as 33%. Joining us in a CNBC exclusive is Bob Iger, of course, Disney CEO. Good to have you back on, Bob. You know, 438 million is a lot less than many of your shareholders were at least concerned. I don't know if you were concerned that you'd have to pay. And I'm curious, was that the case? Did you have more money earmarked potentially? And if so, does it give you an opportunity to spend it elsewhere?
Well, let me start, David, by saying that this is a business, our streaming business, that lost $5 billion in the year prior to my coming back. And we're going to earn over $1 billion this year. So, $4 billion in the year prior to my coming back. We're going to earn over $1 billion this year. So we've got a $5 billion turnaround. And this step is the first big step in the direction of turning this into a real growth business for the company. We were prepared, if necessary, to pay more for this, but the third-party appraiser appraised it at a price that was closer to our evaluation or the bank that was evaluating this business for us. Had the bank, the third-party appraiser, come up with a number that was closer to Comcast, this could have cost us $5 billion more. So obviously, we're very pleased with this result. But now we're focused on doing what we intended to do once we gain full control of this. And that's basically to put these apps together seamlessly, to create an experience for the consumer that's easier to use, easier to buy, to increase engagement, to lower churn, to grow subs, and ultimately to consolidate more and to save some money in terms of the operation. So we're very pleased with this result.
Yeah, I would imagine you would be, given it is, again, far less than perhaps certainly our parent company Comcast was hoping that they would get, although at the end it's still almost $9 billion for them in terms of the overall stake. You mentioned direct-to-consumer. Last quarter, which was only a few weeks back, you delivered $336 million in operating income from direct-to-consumer. You mentioned Hulu now being a part of overall this plan. So what do you do once you own it? What do you actually, what is the consumer going to see perhaps that's different, Bob, than currently in terms of the offering you're making to them?
Well, we've already bundled the apps in a way that is really easy to use with ingesting the Hulu product onto the Disney Plus product. But obviously, this is a step in the direction of putting these apps together fully, making basically not only a seamless experience for the consumer, but as I said earlier, essentially a one-app purchase. And that's clearly important for us because with the combination of the great quality branded programming on Disney Plus, and with the great value that Hulu provides with not only volume in terms of general entertainment, but quality, this is a great combination, and this is, again, a big step in the direction of us enabling all of this, and also turning Hulu into a more global brand as part of the Disney Plus offering. And then in addition to that, we've got ESPN coming with the direct-to-consumer product toward the end of this year, and at the end of this fiscal year. And obviously when we do that, we'll put out a great bundle for the consumer, which will enable the consumer to buy all three and have a seamless experience between Disney Plus, Hulu, and ESPN.
Right, as well. Listen, there's been plenty of other news, not necessarily related to Disney. Yesterday, though, Warner Brothers Discovery announcing it will split its company. It's not long ago, of course, Comcast also splitting off its cable networks, including our own, into a new company called Versant. You and I sat down almost 2 years ago now in Sun Valley, where you'd indicated certainly you were looking closely at the possibility of divesting some of what you called non-core, but were some of your cable networks. You chose not to, Bob. It's a different direction than Warner Brothers has gone in or Comcast has gone in, and I'm curious as to why.
Well, you're right, David. 2 years ago, soon after I returned to Disney, I put everything on the table and asked the team to evaluate, one, whether we should buy Hulu, or whether we should sell Hulu, whether we should sell our linear television networks, or whether we should hold on to them. And after a pretty lengthy process internally, and really taking a long look at what these properties could mean to us long term, we decided that the best course for us to take was to not only hold on to Hulu and buy it in its entirety, but also to hold on to the linear television networks and to integrate them seamlessly with our streaming business. Because what that has enabled us to do is, one, aggregate revenue, both on the sub fee side and on the advertising side. There is still enough linear television subscribers to generate a significant amount of revenue in both cases, in advertising and in subscription fees. We program them seamlessly. We manage them in one organization, and so there's been great economies of scale in doing that. We also aggregate audiences for marketing purposes. And so what we've determined is the combination of both is actually a winning combination for us. It's one of the things that's enabled us to turn the streaming business around from a huge loss to profitability. And over the next several years, it will enable us to grow margins significantly on the streaming side because, again, the ability to amortize program costs and the ability to essentially aggregate audiences and revenue. We're pleased with the direction we're going. Look, it's also interesting to us that as many others exit that business, I think it gives us a stronger hand to stay in that business. We're very focused. We will have, interestingly enough, a linear television business that's paired with a streaming business. So when you think about it, these spin-off companies won't have the assets from a streaming perspective that we will have.
No,
again,
well, that's right. But they're separating out. Yeah, they're separating out to get a higher multiple, perhaps, on what they call now the growth part of their business. I mean, one differentiator between you and Warner Brothers, though, is you have ABC. You do have a network. Interestingly, Comcast chose not to include NBC with Versant. You know, I wonder, because at the time you were referring to our conversation a couple of years back, it seemed that even ABC you were considering, potentially saying so long to. Is there a lot more value in a broadcast network, perhaps, that you perceived previously?
Well, I think there's a lot more value in a broadcast network, again, if it's paired very, very seamlessly with a streaming business. And you think about our core networks, obviously ESPN is a big one. That will be connected, obviously, fully with ESPN's digital offering. Disney Channel is connected seamlessly with Disney Plus. FX and ABC have fed Hulu programming very effectively. And now when you think about all four, and we also have Nat Geo, which does the same with Disney Plus, when you think about those 5 networks and how they're programmed across linear and streaming, you've got a business that actually provides us an opportunity to not only grow, but to grow margins in the process as well. So again, we like the direction we're going. We like the fact that we're one of the few that is doing this, because I think it sets us up to be even more competitive in a marketplace that's becoming even more fragmented.
So, Bob, Jim Cramer, good to see you.
Hey, Jim.
I am concerned about, is there a price where the theme parks are too expensive? I mean, you could just say, listen, it doesn't matter. Whatever the freight will bear, we should do it. But then again, there's a Disney reputation. You don't want people to have to spend $50,000 for 7 days if they go to Orlando. And I'm just trying to figure out how you reconcile. At what point are people paying too much and you think it's wrong?
Jim, that was a quick pivot. I've had streaming on my mind all morning. My goodness.
Well,
hey, welcome to my world, Bob. All right, welcome to my world.
Well,
I was listening.
The Green Bay Eagles game. I mean, I'm trying here.
We could talk about the Eagles game. Yes, I think the Eagles are going to Green Bay. They'll be on Monday Night Football in November
of this year. I asked you if you were going to that game, and if you were, I was going with you.
Well, okay, that's an invitation I will accept. Look, we've been expanding our theme park business for quite some time, providing our guests, as we call them, with a much greater experience, a better experience, because of the array of product that we offer them. It enables them, by the way, with more to do, to have an extended length of stay, and improve basically the price to value relationship that they have when they go. We do a lot of research on this. We're very mindful of the fact that in today's times that there are many consumers that are struggling from an economic perspective. It's one of the reasons why we've protected the lowest price point, particularly at Disneyland. We've actually increased the number of days that's available. We've done a lot of things to essentially address the issue for people who have a harder time affording the visit to our parks, not only again in terms of increasing value, but also increasing accessibility from a pricing perspective. And we don't really see any sign, as our last quarter results indicated, that pricing has become a huge issue for us, but that doesn't mean we're dismissive of the issue at all, or that we in any way are not mindful of what consumers are experiencing today.
Well, so you say you're not seeing anything, and obviously that tracks with last quarter. What are you seeing on the ground right now? I mean, obviously cruises, the parks, a decent reflection in terms of the consumer right now. Continues to be strong, Bob?
Well into our third quarter right now, and we've got one more quarter to go for this year, and I'll only say that so far so good. Our trajectory in terms of the results this year in that business is very positive, and we've not really seen issues, as we said in the second quarter results that we announced. We've not seen issues that in any way would prevent us from continuing to grow that business.
Bob, a lot of companies right now, they're all focused on costs. You've been as well. When you came back, you were talking about a $7.5 billion cost reduction. I think that's been completed. There were some reports of recent layoffs at the company. I'm curious, do you have a new target in mind, a target that you're not sharing perhaps when it comes to cost reductions?
Actually, when I came back, I targeted $5 billion in reductions, and we delivered over $7.5 billion in cost reductions. I've charged the team with continuing to look at opportunities. Obviously, in a business that is so dynamic, that has been disrupted in many cases, it's incumbent upon all of us to.
Oh, Bob Iger, you're a jackass.
Line, not just in terms of the revenue that we're generating, but the costs that we're spending, and the team is just.
You go woke, you go broke, you penis breath. You germophobic, morphodite, geek. You know, I never did like you, Bob Iger. What have you done to Disney? You've ruined it. I don't want to listen to your excuses. How about woke reduction? Are you working on that? Okay, I've had enough of him. I can't even look at him. And I don't want to look at him. So this is what they're doing. They're pumping this stock. They want it to break out. We've been in a Darvis box for 3 weeks. You got to understand how these people work. A lot of investors here, they're raising price target 130 to 125. Capital raises target to 130. So they're talking about the Hula stake purchase. Probably another bad idea. I did say it was a buy down there at the bottom, but now I'm saying they're pumping it. Which means if they say 130, I say 120, but not right now. On a pullback. I said it. Washboardjim on the 6th month, the 10th day of 2025. I'll set an alert down here off the top of the orb, but I don't know if I want to trade it. I'm really not excited about Disney. Not what they've done to our children. And she's not showing any cleavage today. Nicole ain't. She must have got my message. Now, Tesla had a good run yesterday. Good morning, Funk. Good morning, Angel. Good morning, Washboardjim.
What's up,
I just got home. I have a tendency of leaving my mop out there at the IRS. So I got here and I said, oh shit, did I leave that mop out again? So I went back here and got my mop and put it up in the utility room, and I went to the guy that teasing me about always leaving my mop out. I said, I left my mop out because I want to have one of your cookies. Good morning, Bug. Good morning, Randy. Good morning, Ella, Jesse, Link, Magnificent, Michelle, Rose, RTP, Studio, Subway, and Franchise.
How did the
Oh, the bell's rung already. Shit.
Here we go. We're about to hear the opening
guess.
bell here on Wall Street. We have FTV, that's Fortive.
I had sell off into close last night. PLTR down $1.34. Boeing down $1.36. I think Tesla can pull back some. What's Apple up to? Apple's up $1.15. Apple at resistance right now.
Oh, damn, I missed that.
Apple.
No, Master. Jesus Christ, it just freaking knocked down into us.
We got a 202.19 alert set for Apple. There it is, right there. Triggered. You got 3 reversible hammers. I don't know. I think I'll wait. Put an alert on the SPY off to 63. On the 1 minute. We got a rising wedge on Green's chart. Nicole, no cleavage.
Weekly chart here. If you actually look at the development, you are seeing actually.
Damn. How am I going to get anything done today? Set an alert on /ES off the 200 EMA on the 2 minute SMA. I don't know if I can. Single mean. Well. We're at support here. on the SPX.
He has to.
I'll wait until the bottom of the orb. Nope. Good morning, YouTube. Better write that down. Okay. Just dropped a little bit, kind of to support right here. But I'm going to wait a little bit longer. SPX. So today's SPX watch is definitely going to be 30 or 35. Maybe even 40 if we start to run. Uh-oh. Yeah, I'll bring it back to 35. 40. Make up mind. If we dip, it'd be 35 or 40 or 30. I'll set my alert above the VWAP on SPY. That's 650. We need to stay above 600 today. China sales. Meta's up $7. We're up to 701 on Meta. Disney just created a new high. They're definitely pumping Disney right now. They want it to break out. Sophie had a little bounce. SOFI. Oklo had a little breakout, pulled back. Nvidia's not holding its highs. It keeps dipping. Okay, we got SPX here at 5, the 60/30s. This might be my chance. We got a Head and Shoulders. Okay, get ready. We got a double bottom. No, not yet. Never mind. We are at the 200 again where I called it out here before. And the 63's gone up from, there it is right now. Okay. The 560/30s are on watch right now at 470. The 60/30s. 480. See if I can get price in here. I want to get in. It's 490 right there. $60/30s. At $4.90, we're at $5.90 right now. Profit, 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 profit. Patience. Good job, studio. What'd you tell me? Move soon? Where do you want me to move to? Randy? Okay. And we're holding the 200 EMA right now. All morning. And top of my orb compared to their orb is just a little bit lower. At 60/18/40. And I'm going to stay with their bottom orb. So we could double bottom. And that'll be a very strong buy. It's 60.0989. I'm gonna go get my tea. It means I got my first trade out of the way. I'm gonna go get my tea. But this was definitely a support level. The 200 EMA today so far on the 1 minute. Nice little bounce. $5 to $5.90. SPX trying to break out. We got a double top on my orb. And we just hit their orb. Damn. $5 to 640. I'll be right back. I gotta turn this air on. It's gonna be a stuffy day today. Well, missed that one. Should have grabbed it. I mean, we sat down there for 5 minutes. I don't know if I would have bought it off the 2 minute, but I sure would have on the 1 minute. Okay, we're back down to 530. See if we get another dip to the 200. If we hold the 200 right here, there's 530 right there. $5. Okay. Now we're talking business. I'm going to grab one right here. See if this continues. It might be pushing my luck. $5, $5.10. Whoops, $5.10, you dummy. I don't know about this one. Feel like I've waited too long. How many times Sue asked, how many times are the SPX going to reject 60-20? Well, I could have got my $5 right there. Well, maybe 490 even. Okay, this is a triple bottom or quad bottom. If you can count to 4, we just might make a little bit more. We do not want that dip. Okay, I'm going to add on right here. .80 and 510. Well, actually, it's a, well, I don't know. I'm going to call that a 1. But there's 63 EMA. Let's go. Anybody in it with me? Just know you're a little risky here. Come on, let's have a big old spike. Price ain't moving up that much. $5.20. $50. $5.30. Okay, Richard, we're getting to a head and shoulders up here. Don't get greedy. $10.4. There's $5.50. Now you're at a head and shoulders, so you're definitely at a resistance here. And if we do break it, I think we'll break the orb. But if not, it's a good scout. I know you like to hold a little longer than me, but $5.50. Head and Shoulders. Yeah, I still think we're waiting for them inflation numbers. So that's my second scalp of the day. That was 1, 2, 3, 4 set up off the 200 EMA. Make a business decision, Richard. Are we going to break? Or are we going to get out? I'll show a picture of my project I did yesterday, and there we go. Not too much of a gain on that. Should be back at 550 right now, but it's not. Well, don't get stuck in it, Richard. If you're noticing horrible action, price action, right now we look bullish, but I'm just saying we hit the right shoulder of the Head and Shoulders. So it's going to consolidate at that shoulder line. That's why I got out at 550. I don't know. I'll take $110, but maybe it's consolidating yesterday's run. Yeah, that's such a poor run. It did get to 550, 560. Let's see, Disney. How did I know that phone was ringing? Always clean, may I help you? Yeah, what's up, brother?
Yes, my name is Brian. I'm calling you from Marketplace. How you doing?
You doing all right? You like jasmine tea?
Well, the call is in regards to let you know that you qualify for some additional healthcare benefits from the Marketplace. Only that is your age is below 65. So how old are you for qualifying purposes?
I'm 75.
And what is your date of birth?
Oh, man. Kind of senile, I can't. 1955?
Do you listen this way?
Boom, shakalaka!
Finally got one that got smart mouth with me. I told him I was 75, and he says, "When was your date of birth?" And I said, "I'm senile. I can't remember. 1955." He goes, Okay, we're getting orb. $5.50, Richard. Your second chance. Tell me if you made a business decision. Good morning, Rose. How are you today? You know, I want Caroline back. Hope they didn't get rid of her. If they did, I'm going to file a complaint. $5.50, Richard. Woo, look at that, 570. 570. Out at 580. Woo! My intimidation did not get him out of the trade. He held on like a tiger. I must say, good job, Richard. Now you can add to that kids' fun. I think the guy got a little bit smart with me. He goes like that. Okay.
About the markets now in the next week or two, as we've had a pretty good run. The S&P is up now, trying for its 6th winning day in 7. Your thoughts?
Yeah, this is one of the, I think,
My
slowest
thoughts. I
meltdowns
love
we've
you.
seen in stocks. We're finally back above that 6,000 level on the S&P, but not really that close to breaking out to new highs yet, certainly given the pace of the rally here. And with the VIX at the lowest level we have seen basically in the past year or so, give or take, we're getting option prices cheap as well. So I just
Randy, there's your answer.
Due for some sort of at least pullback, maybe not of even a big magnitude. You alluded.
He said the VIX being so low that it is causing the option prices to be cheap. Do you agree?
See earnings growth as well.
Randy?
Stocks are at extremes of valuation. S&P 500 over 3 times price to sales, almost 20 times.
He does agree.
Times price to earnings. So certainly not cheap by any stretch of the imagination.
I've never heard that before, so that's a new one on me.
Hanging out around 4.5% on the 10-year, near the highs we have seen over the past several years. So I think on all fronts, the market is kind of getting a little, ignoring too much and putting too much faith, I guess, in AI and growth going forward. I don't think we'll see it.
He just got through saying it was a year low.
Have come to fruition, and we'll see that in the market and in Disney as well. With even a 3 to 5% pullback wouldn't be unexpected.
So maybe too much focus on AI revolution, technology being the catalyst. I mean, we've seen an incredible run. So if you're expecting a bit of a pullback here, because we've hit this 6,000 mark, we've come up from 4,800 in the April lows. So on pullbacks, you must have a list of what you're looking to buy. If you like it or you're looking for it just a little bit cheaper, what are you going to be watching for? Is it a sector? Is it particular names that you will buy on a pullback?
Yeah, absolutely. I think some of these, depending on the pullback we get, will widen that list out. But I think some of the stocks.
No, you're correct. It's not that low.
Might have missed going up. The let's call it lower beta, high AI.
It's not no year
names.
low.
So any of the names like Nvidia, even Apple, and so forth. I think on any kind of pullback will probably be bought here. Microsoft might be one as well. Although I don't like Microsoft here, but if we get a 10% pullback. Price does matter in my opinion, so I kind of like most stocks if we do get that pullback. I don't think we're going to get a drubbing, but I think we need kind of at least some sort of drop here to get the value investors back in to ultimately maybe take this market to new highs if we get that hope for AI kind of earnings growth.
Yeah. Tim Bigham, option strategist, buy alerts. Thank you, Tim. Great to see you. Appreciate it. Coming up next, we'll discuss the economy. Our next guest says the economy is suspended in a fragile middle ground. He'll explain that. Much more on Morning Trade Live. We'll be right back.
Oh, I forgot about my tea.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college
Dad,
education.
how come Grandpa doesn't sleep with me
Someday it'll
anymore?
be their turn.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless.
We're at resist yesterday's highs on the SPX
News and insights.
at $6.
Trade brilliantly with Schwab.
I had fun trading this thing yesterday. Well, the ups and downs.
Welcome back to Morning Trade Live.
Right now we're forming
The
a
economy as we are waiting
bear
for
flag.
very
We could hit 60.24 today.
consumer sentiment this week, and last week we got in much.
I love you, Nicole, but I love Caroline more. We just broke resistance, Richard. Damn. Okay. Target's above $100. Try to figure out where's the best place. We got a triple quad top here. Support. So if it holds this here support area, it can run up 60.24. That's an upward megaphone. And the cloud stops right at the 63. Okay, we're at 520. You ready to make another business decision? Three black crows at support with a double bottom with a yin yang at $5.20. This is the 60/30s. $6 right there, buddy. Come on. Anybody new to the room, give a shout out. We have any LA protesters in here today? Any Antifa members? Rose, are you an Antifa member? Subway, are you an Antifa member? No. Did you think that was funny? Say yes. Mannequin, are you an Antifa member? $6. Let's blank it. Ooh. Michelle. I'm going to have me a salad. Oh, I haven't had my prune juice yet. Come on, baby, break out. Should have sold them at $6. We'll see here. It's right now 10:33.
Damn it.
We're at the orb on the SPX on the 1 minute. Got somebody messaged me that is from LA on the phone.
400 master call.
Oh, did it pull back? How's it out there in LA, Vic? Are you a TIFA member? I know you're not. Yep, I see your Vic. You got a fallen wedge.
Well, I also had that 384.15 spot mark as a reversal.
Yep.
Close enough to it. When I saw that engulfing candle anywhere near that freaking support zone, I went ahead and took it.
I think this next pop, I'm going to get out of this. I've had 2 chances to get out of it, the SPX.
I mean, you're in that ES resistance zone.
Yeah.
I'm up 40 a contract. I'm up 400s already.
Same here.
50.
Same here.
Yeah. Oh, you got in them at 280 with me?
No, I got the SPX. I'm up 50.
Oh.
Up 60 now. Might sell these suckers. Anybody get in the SPX? I'm thinking about selling. Magnificent, no soup for you. Come on, baby. You know how much I want you to break here before I go to lunch?
No soup for you.
I think 580. Take it.
I cannot accept that course of action.
God. Got to be a way you can turn that volume down. That could blow our eardrums. Although I like it. Whoa. There's 590. There we go. That's what I wanted to see.
You just hit the top of the ES resistance with that weight.
Yep. Studio, did you get it? We got an ascending triangle setup here. We could break out, but I don't want to take that risk. It's bullish. Trade number 3. Take a deep breath. Yesterday was a little bit more fun, but we're just now started. The day has begun.
Damn.
Damn it right. 640. He's going to get his 624. Right there, bam, smack on. Woo! Did Mr. run with that?
No, I pulled back, but I'd already taken $50 a contract on it. Hey, when it lost to 9, 3 candles go, 4 candles go.
Yep. Well, I'm pleased now. I can definitely go have lunch.
It is touching that friggin' reversal zone. No, it needs another 50 cents, actually.
We can go higher. I mean, we get up to 60.27 with this today. $3 more bucks.
I'm sorry, I said resistance. I meant support on master.
Mm. I've been holding on to a contract, and then if it dips, I buy another one. And I've done that for about a week now. Started last week and then this week. But I'm out, completely out now.
That's the pitch. Yeah.
Randy, are you an Atifa member?
There he is. Tweezer bottom. And the 400 is again at 264.
Crickets. Get ready.
Count to 3 and trade with me, but count to 4 to make much more.
Can we hold this support level? Nancy, did you get that feta cheese I asked for last night, baby? You say you got some avocado oil too? All right, I'll rub it on your back tonight.
No, we gotta get you a girlfriend.
Well, it came back up to resistance again.
There we go.
Yep. We're back down to the 63, getting close to it here. I think Jimmy's going to redo it here. Oh, we could hit the 200. I'll wait. I'm going to wait. Give it just a little bit more. It's lunchtime anyway, so I don't want to get stuck in a trade and have to deal with it while I'm making lunch. Today I'll be adding organic black olives to my salad with feta cheese. and chicken. I'd watch Mister here. If you can get a candle above the 21 EMA on the 1 minute, I think you can run it up a little bit. It's had a hard time breaking the 21. It's been quite a while now, and this wedge is starting to here. I'll put the chart in the room. Get it up to the 63 at least. Oh. Well, it's not really a wedge. It's a bull flag. Okay, we're at 510 on my SPX here. We're at the 63. This is where it's got to bounce up. So Jimmy's going to prepare an order at $4.90. $4.80. Take a small little risky here. Let's do it. You can do it. It's 460. Come on now. I bet you it is going to come down to the 200. Come on, baby. 510. NASDAQ's flat. The market's flat right now. In the green. There we go, 570. Yeehaw! Beautiful, beautiful. Come on. So you see this here previous high right here? This is called a head and shoulders that I called earlier. And it came back and hit that shoulder line. And it came back and hit that shoulder line. So that's where I jumped in the trade, just hoping it would hold that shoulder line on that head and shoulders. You understand? Came up and retested that shoulder line on the second time on that head and shoulders and broke out, and then it came back and found support. So your resistance, you got to draw a trend line on that candle right there to that body. And that'll be your next resistance level for an exit idea if you haven't already got out of it. Right now you're at 570. So I took one off the table and I got one on. $570 right here. There's 580. Yeah, you probably, yep, there it is. 590. So it's $110 a contract. And you're at the 1, 2, 3. See it? 1, 2, 3.
You're up $50 a contract on Master.
Good job.
265 to 315.
570 and $6.
Oh shit! It just popped.
can take that.
Here we go again.
Oh.
I think Master's gonna try to run to the bottom of the orb.
What did I just do here?
Alright, let's see how you start back here.
Three black crows set up here.
Now we should go back to the 200.
I wanted to go out and make lunch. I'm at 490 off the three black crows.
Yeah, studio, I think. Shit, I should have actually put this on my other screen so y'all can see it. Where's my master? So we could actually run up here to the 63, which is dead ass on the resistance zone. This 388.75.
570 now, 580. If you're in this trade, think about profit, because that's the way I've been trading it today. Or at least scale out one if you got two. There right now, 590. Boom. If you can count to 4, you might make a little bit more.
Jesus, there's the top. Your master call just went up to $60 a contract.
Did it pull back and you get the dip, or?
Mm-hmm. Yeah, it hit that 384.15 level I had marked out. Top base at 325 from 269.
Always clean. May I help you? There's $6.
Meta's at the bottom of the orb.
Damn serious. Had a good run today.
With an oversold RSI. That's why it's got to pull back. It's oversold in a resistance zone.
Ford's up $1 from that last time I saw it, from under not low nines. We got earnings coming up. Oh, let me. Come on, Jim, rip. Ah, saved it.
All right, your master calls are up $80 as a contract, and you're hitting resistance. So here's your exit.
Very good. The question is, can we break this resistance?
I don't know, but next time you get pushed down to the orbit, be the third time that it tried to push below it. So
Oh, my sweetheart's on. You're a 10. One, two, three, four. Can we make a little bit more?
VWAP has moved below the 200 SMA on the S.
Nope, didn't touch it. Excuse me. Yeah, I think I'm gonna go have my lunch right now. Get it going. So I'll leave this up
some
a
resistance
little bit.
levels that have now got the possibility to become
Is that
support
too loud?
levels on the way back down. For investors, that adds clarity because now they can make those if this then that statements around areas that have been previously tested instead of plunging ahead into kind of uncharted territory. So if this breaks 250, some investors might think then exit the position, or on the other side of that coin, if this bounces off of 250, then add to the position from that standpoint. That's that clarity of decision-making process that technical analysis brings. Diane?
Love that explanation. Love the explanations in general because I feel like this just became very educational and it lines up with what I often see you do on social media, Jessica, educating people. Now, you know, for people who didn't know, they do understand what RSI is, what MACD is. All right, Jessica, you're up next. Let's talk about the next trade on your list.
We know what RSI is.
Ticker AVGO. It has, over the past month, similar to what we've seen in the MAG 7, gained some ground, recovered some significant ground. So what's your view on where it goes from here?
Yeah, thanks, Diane. And I'm all about bringing education. I think that's great, and I am excited to be in Miami with you as well. But AVGO, the market, again, that euphoric state, this is a really great example. Into earnings, this stock rallied very hard. And so if something comes in that the market does not like or investors do not like, it falls. And that absolutely happened here. They beat expectations, and they gave positive forward guidance. This is a green flag in my view, but the market expected more from its non-AI revenue. That's where the setup matters. There was a big run up. There was a breakout above 250, which I don't believe we're above yet, so something definitely to watch. But this dip to me is just more about sentiment. It's short-term positioning. It's less about fundamentals, if you will, but there's strong AI momentum. They guided very, very high, and it's a buy the dip opportunity to meet. So the story going forward that I'm looking at is how fast is Broadcom's AI business growing? Are they're already delivering upside against expectations when it comes to AI, and we've seen lessons. I think the market is just really scared of that Kodak mentality where there's companies that are diversified and not just focused on AI, that perhaps it'll hurt them more. And we see that with Google, we're seeing this with Broadcom, and I'm seeing that more broadly. But what we're missing is that companies have become resilient, agile, and are more adapting, and I think that's the story here. So as I see revenue grow on AI, it's okay to see the other dissipate as long as this one overcomes it and it's exceeding expectations. We are certainly on the path forward in my view for that.
Okay, so Ben, that begs the question then, Jessica mentions the story. What's the story that you see when you look at the chart for Broadcom?
Well, when we talk about a story, I mean, context matters. And I think the context that Jessica brought up is the fact that this came on an earnings announcement. And we see a shift post the earnings announcement. So good numbers, but the guidance maybe a little bit softer and not as aggressive as investors wanted to see. And so we saw that change, and that tone change came with the break of the RSI line, meaning prices are closing closer to their lows than they are to the highs. That's what that indicator looks at. MACD, same kind of thing. You're seeing a slowdown in the short-term moving average versus the longer-term moving average. And again, that's seeing that price pullback. If this had occurred any other time other than right at or after an earnings announcement, I might look at it from a technical perspective and say that's simply institutional investor positioning, in that they bought it as it was going up and then they let it settle back down for a couple of days, and then they take that boy band approach of buy, 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 and push it back up again. But I think from a retail trader perspective, this comes as a function of, hey, it's not ideal. We're going to rotate out and maybe look for other opportunities. If it finds another level of support, maybe down around this 236 where it was a previous resistance, then maybe that becomes that buy the dip or that bounce possibility. But again, technicals will bear that out, and we'll see if that happens. It's kind of caught in that limbo zone between that 247 and 236 range at the moment, though, Diane.
Okay, I am trying to hold back Ben from doing this. Bye. I'm sorry. I
am so with you, Diane. I heard the NC reference, and I am sitting on my hands.
It triggers you in a positive way, obviously.
Yes, it does.
All right, Jessica, let's talk about the last ticker on your list, Coin for Coinbase. What's your view on this one?
Oh, so speaking of boy band references and bye, this is a volatile play, really on crypto momentum. So I come on here often, and oftentimes my picks come from my technical scan, which I just look for a crossover to 13 and 26 weekly moving average, 1 2/4 worth of pricing as a signal, and then I verify from there. So not everything on that list is, but I run that on just the breadth of ETFs available across the market, domestic and internationally, and there were at least 30 Bitcoin that showed up. So I want to look for some exposure to that, and that's where Coinbase came into play. So showing up on that technical scan, what's important to know about Coinbase here, it is very sensitive to crypto prices and trading volumes, which means it also has a really high beta. I think last time I checked it was about 3.28. So the market moves at 1, this moves 3 times more than the market. So this is a volatile security, not for the lighthearted to add to your portfolio. So we want to make that sure we know that. But there, like we've been discussing, there's some regulatory tailwinds that are emerging across this crypto space, tokenization space, digitization, the stable coins even. We saw that with the Circle IPO. This is all just interest that's happening, and I think we're going to see something bigger within that space that has to do really with technology, but it's actually efficiencies that I'm focusing on. So with this, just watch Bitcoin's price volatility. It's very much linked to that because of the trading fees and AUM fees associated with that, but that could weigh heavily on Coinbase, but I like the exposure that it has to Bitcoin because I'm bullish at Bitcoin on this environment.
Yeah, what's
okay,
up?
all right. So Ben, you're up next. Take us through then what you're paying attention to when it comes to this chart for Coinbase.
Sure. So this is a stock again that's been moving sideways roughly in the last month or so. You can see that reflected in the 200 period moving average over the course of this chart. But it's established a pretty solid resistance level. So if we're just looking at technicals here, right? Technical analysis suggests that maybe there are better times for traders to enter a trade than others when there is clear evidence that momentum and price is moving in a particular direction. So that 270 resistance, a break above that, again, going back to that if this, then that. If price breaks above 270, then that's a breakout, suggests some upward movement. But you're seeing RSI tailing off. You're seeing momentum as far as the MACD is concerned tailing off a little bit. So you might say this, investors stepping in at this particular point in this confluence of this ascending triangle are simply tossing a coin in a fountain as opposed to waiting for that break above resistance and trading what they see happening as opposed to what they wish might happen here, Diane.
Oh.
All right, thank you, Ben.
Setting up again.
Senior Manager of Trading Services here for Charles Schwab, and Jessica Inskip of StockBrokers.com. Great insight on Jessica's list.
We're setting up again. Watch this. Right at the 200. $4.20. There it is. 420. Same one. 60/30s at 420. Now I don't know if this is a good one, but we're going to find out. Off the 200 SMA. Ooh, shit. Well, that didn't work. Damn. $3.20. $3. Fuck. God. Okay, I gotta make this good here. $3. Shit. There's 350. Okay. Oh, that hurt for a second. Now I've added to this. I got 6 contracts.
Holy shit, what happened?
Yeah.
I got
got
away for 1 second.
I got stuck in it and bought dip here. I'm at 390 now. I'm up. Out.
Nvidia freaking took the biggest hit, looks like.
Saved my ass on that trade.
Yeah. Came right out of my 6007 PS zone. Man, sure, man, I could at least see that.
Jesus Christ.
Mm-hmm. Well, let's go back down there. Looks like.
Yeah. I'll take a break. I'm gonna finish my lunch.
God. You wuss. Get your ass back to the computer.
Oh, well, I did. I came back and I bought it off the 200, and then them 2 fat candles came in. And
I knew it had to be some dumbass China news. I knew it.
it wasn't bad.
Wasn't good.
China's hard to negotiate with. Whew. I mean, that was good money, but jeez. $480.
does. That's what I wait every day for.
Yeah. And it's got a nice little hammer at the end of it. I'll be right back. Timing was pretty good on that, I guess, but then not.
Look at this. Look how clean this freaking zone was that it bounced out of. Hang on. This is why I marked my freaking zones. I bought 2 of them when it hit it.
Yep.
I got freaking whipped right into it.
Yep. What SPY? You hit mine. Yeah, I think SPY hit my zone too.
And this is why we live stream, so the people that don't mark the zones can see our zones.
Yep.
I was upstairs when that happened, or I would have called it out. I was in pure reaction mode when I got back downstairs.
Let's see here. $598.49 was today's support. We hit $599.24. Or a little lower than that, $599. $599. I'll be back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Diane King Hall, live from the New York Stock Exchange. We're looking at stocks on the move. I want to bring in Sam Bottis, a Schwab network contributor. Are we taking a look at Paramount?
Yes.
Shares higher, but I mean, it's a far cry from where this was years ago.
That's
What's
right.
the latest here?
Look, we are hearing about job cuts, further layoffs coming from this company. Not always a good thing, of course, Diane, but the stock is up today, and that perhaps suggests that
Investors see this as a good thing as far as trying to reduce some of those costs, but also as far as what it's trying to do in the streaming business, because we know that this is very much a function of these industry-wide challenges right now. The headline is that they're going to be reducing US-based staff by 3.5%. That's several hundred employees. There are reports suggesting the company notified the staff of the impending layoffs on Tuesday morning, this morning, as they try to, as I said, navigate a lot of the headwinds. It really is twofold right now. They're trying to grapple with the macroeconomic challenges, aiming to reduce some of those costs, but also as traditional cable TV has been in decline. Not the first time we've heard something like this from this company. They were talking about 3% of a cut last year, starting the process of reducing the workforce by about 15% last August. So very much the market has been anticipating that perhaps there would be more down the pipe. Obviously, this company owning CBS, MTV, and Comedy Central, but we have heard just a string of massive media and tech layoffs in this space, everywhere from Warner Brothers to Disney. Obviously, they are trying to wait for word on their regulatory approval for their tie-up with the Skydance media deal, and no doubt that would put them in a good position as far as some of the implications for competing with the likes of Netflix and Hulu as they really transition towards that streaming business.
Yeah, they've really been trying to push that forward, obviously, and then there were some challenges around that. They obviously want to get approval from the government as well for that, so they want support of that. And this does, hearing about this round of cuts reminds me of what they said when they were originally putting this forward. They had anticipated about 3 waves of cuts, if I remember correctly, and this is probably the 3rd wave, if I'm remembering correctly.
Yes, that's right. So a 3% reduction last year. They were in the process of about 15% reduction at around August, and so now this is perhaps the latest that we're hearing about. We'll see if there are more down the road, given a lot of the high-profile media and tech layoffs that we've seen in this space just in recent weeks.
Yeah, certainly changing landscape from literally yesterday. Warner Brothers discovery, with that bringing up. All right, Nate. That's Sam Bonus at Schwab Network contributor. Thanks to Sam. Time now for the disruptors. Let's bring in Kevin Green, senior market correspondent here with today's company. That's Apple, after its keynote at Worldwide Developers Conference. I mean, just overall, seems to have underwhelmed investors, but you pointed out, is this ever really a needle mover when it comes to WWDC? But what are some of your takeaways, KG?
Yeah, obviously when you're looking at what they presented yesterday and what we got updates on, it's really focusing on the software side of their business here, which is a little bit smaller than the hardware. And I think the market really does obviously acknowledge the hardware business a little bit more than the software business. And that's why it's underwhelmed the street. We are seeing some updates when it comes to the graphical user interface. They have this liquid glass type of redesign to make it a little bit more interactive when you're looking at the screen. And also, they also gave some updates when it comes to the iPad operating systems and how you can have a little bit more access between iPhone applications and iPad applications. That's also another update. And then leveraging artificial intelligence. The reason why we saw the pop this time last year was because of Apple Intelligence. Now we have seen obviously it's been slow roll a bit, but they are going to be integrating some more features, especially utilizing ChatGPT in order for them to have some artificial intelligence exposure. Now, when you're kind of looking at some of the analysts, Citi actually does applaud the liquid glass software design that's going to be implemented here. They have a price target of $240 and a buy rating on the shares here. They continue to focus on Apple Intelligence. The artificial intelligence side really gives them a little bit more of a bear case. Now, when you're looking at UBS, they're a little bit more neutral. They say it's evolutionary, not revolutionary, the products and services that we are seeing roll out here. But they do still have a neutral rating on the shares at $210 price target. Once again, usually a buy the rumor, sell the news event when it comes to WWDC. Not surprising that we are seeing a pullback here, but the stock is making some gains, trying to recover some of those losses from yesterday. And from a technical setup, it is kind of been a little bit of a wedge formation in the daily chart. So you're looking for either a breakout or a breakdown in the shares in the next week or 2 weeks.
And look, it's been underperforming the rest of the Mag 7. So what's your approach for an example trade, KG?
Yeah, this is going out a little bit in time here, looking at the July 18, 210 calls, buying that outright for a debit of $4.70. So the max loss on this trade is $470. break even up to $214.70. So you'd like to see the stock above that break even level at least by the time of expiration in order to basically have a nil on this trade. But there's unlimited profit potential. If you believe in the long-term vision or maybe even the short-term recovery of the price action, as well as that technical breakout to the upside, as well as the broader equity market moving higher here, this is the trade that gives you that upside exposure. Unfortunately, you do have some downside risk. If the stock does kind of fail, you would also kind of lose to the downside, obviously, because of time value decay and things of that nature. But giving yourself a little bit of time to see a pop in the stock here, Diane, you just got to remember, when you're looking at Apple's product mix and their profit margin mix, they made $2 for every dollar that's spent on hardware. So they would rather see some more software spending from consumers rather than hardware. And I think that's the direction they're going to go for the next couple of years.
Indeed, and then you look, like you said, there's time built into that, so that could be beneficial here. All right, thank you. That's our Kevin Green, senior markets correspondent with an example trade on Apple. Appreciate it, KG. Coming up next, time for our 360 round. We're taking a look at GameStop ahead of its earnings. Those are due after the close today. Trading 360. We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments.
Carl's way is the best way.
No can do.
I'll get out here.
Where are you going?
Schwab.
Oh, that's a beautiful tweezer bottom on the 5-minute.
Schwab, a modern approach to wealth management.
I mean, that is nice. Look at this here 5-minute chart. I mean, if I would have been looking at that, I would have bought it and probably held. They're at 430 now anyway, but that was a good scalp. That is a beautiful chart. What is that? A spy. How in the hell did I get toy on there? I don't know how I got toy on there. Can you please look at Pepsi? That's P, what is it? PEP? I can't look at that chart. That orb messes up my charts when I look at a bigger time frame. We're at a resistance right now at 131. So I'd wait to see if it pulled back 50 cents. Maybe even pull back to 130.32. Yeah, 130.50. Where I'd set an alert at. Is that what you think? Pepsi announces timing availability of second quarter 2025 results. We've got a pivot point right around 130.18. YouTubers, today I'm having chicken salad with black olives, carrots, radishes, celery, romaine lettuce, cucumber, drizzled with Italian dressing, zesty Italian dressing, and pepper. I think that's what just tickled my throat. It was a piece of pepper. And Joe, would you eat that? I know you would. Too healthy for her. To get my age, Michelle, you got to eat like that. No, look at that reversal, man. $7.20. That is what, 600, what? 6 times $300. That's like $1,800 on the table. Damn.
Very well, but I don't know. Now,
looking back at the markets, I think you're looking at yields that are modestly lower, back below 4.5. I would call them quiet. Little bit concerning that crude oil has rallied about 10% in the last 10 days, from 59 up to 65. That's a bit concerning in terms of looking at inflation. I think tomorrow's numbers on inflation are, now that we've seen the wages data in payrolls, I think tomorrow brings a little more attention from traders. But that being said, Tom, something you mentioned, a lot of these names, Tesla's got, rallying into their robo-taxi event. Meta flooding the zone with news. I mean, think about the articles or the news headlines that Meta's put out in the last 2 weeks with energy and then $10 billion investment. Now this new super intelligence group. There's a lot of headlines out here for a slow week, Tom. We don't have a lot of earnings. Data was NFIB, good, pretty solid number in NFIB if you're a data geek, back above its 51-year average. But I think we're waiting for some inflation data and some headline to move this market. But that being said, without any, we're drifting higher, Tom.
Yeah, your point, Kevin. I can't imagine them coming out of this meeting and being dour and sour after these talks. But maybe China has the upper hand now because Trump did kind of get
Man, what a run.
How important these
I wasn't thinking about food, man.
Are going to be for our technology and automotive, amongst other sectors out there in the economy. So we'll have to wait and see. But the longer it goes, it seems like the more optimism that's out there for stocks. But let's expand this conversation, bring in Kevin Green, senior markets correspondent here on the network. KG, one of the things that stuck out to me, the World Bank came out. They lowered their global trade forecast to 1.8% in 2025, down from 3.4% in 2024. I thought this would negatively impact markets. They did say that they don't expect a global recession, but the current decade could see the smallest economic growth in over 60 years. I thought that would negatively impact markets, but once again, the optimism that's out there for equities and risk on assets right now is pretty strong.
Yeah, Tom, sorry to break your heart. No one cares about the World Bank and their expectations moving forward. They've been wrong before, and they'll probably be wrong again, unfortunately. Look, this market really wants to see something coming out of these trade deals. I think we might be actually fairly close to some form of an announcement, a really decent spike in volume over the last 3 minutes or so. And that's something that I'm kind of being mindful of. If you kind of look at today, it's been very low on volume. We did see a little bit of a push to the downside. President Trump made some comments around Iran. You did see crude oil kind of spike to the upside, but we haven't had any type of news coming out regarding this trade deal. And if you look at the price action from overnight as well, it kind of indicates that the market's kind of preparing for this. We were up around 0.4, 0.5% overnight in hopes that we might have some form of an early agreement today. It did not actually happen, but obviously we are seeing some buyers stepping in, even when we did violate that 6,000 level on the S&P 500. So we have some economic data that's on the calendar over the next couple of days that I think will take front and center if we do kind of finalize this trade talk conversation today. We have CPI tomorrow. Interesting dynamic that's taking place there. We have the 10-year auction, and then everybody's looking at the 30-year to see if there's enough demand that's going to be out there. I would be very shocked if you have Scott Bessent not having the troops ready and available in order to buy up that 30-year to show some strength there. But we will see. Overall, this is actually still a good market. Just trend still to the upside here.
Yeah, Kate, Kev, when you look at this, that CPI data that's coming out tomorrow, it's supposed to be year over year a little bit above after a couple months of declining inflation, which had been pretty positive, but the market kind of overlooked that because consumer sentiment data, for some reason, was taking the headlines away from decreasing inflation. But this is an important number. If we see a large reacceleration, that's going to be negatively impacted probably for the markets. Do you see that taking place?
I'll give everyone the benchmark, right? If you're looking for the month-over-month numbers, you're watching for 0.2s and lower, right? 0.2s, 0.1s, unchanged. A 0.3, like we're going to get in core, no bueno on a 0.3. A 0.3 alludes to higher than 2.4, trending towards 3%. So, and even, like I said, 12.3s is 3.6. So you don't want 0.3s on at any type of inflation data. So look for 0.2s and 0.1s. Anything higher than that is no good for the inflation fight. So yeah, the fact that headline, like I mentioned in the first segment, crude oil is a little concerning, moving from 59 to 65. That's a 10% jump in energy. That's going to start showing up somewhere eventually. It may not be in this number, but it might be in the next one if crude oil stays up here, despite more supply coming out from OPEC Plus. So that's a bit concerning there for me when I look at what caused inflation when it was running hot, what was bringing it down. It was crude and energy. So I'm watching that number, very important tomorrow. So breaking down the numbers like we like to do, I think it's important to see rent and food. What's going on with eggs, right? Eggs have come down more. Is that going to show up in some of the food at home outlook? So yeah, I think tomorrow's a big number, right? And remember, because the June meeting for the Fed, we're going to get SEPs. And so I think that's, they're not going to move on rates. So the most important thing might be some of the projections going forward. I think that's, I think that's vital here, guys.
KG, when you look at this, with the S&P 500 now down only 2% from its all-time highs, NASDAQ about 1.5% off its all-time highs, it feels that, everybody's been talking about the economy is deteriorating, the consumer's not as strong as it used to be. We're starting to see growth rates start to slow here a little bit. But the equity market seems to ignore maybe some of those headwinds out there from the economic side of what we're dealing with on a daily basis. And then you throw in Trump and some of the considerations there. It just feels like this is a thin rally to begin with. And that's just maybe my opinion, that you still need to be cautious at this point, even though you've got the VIX back below the 17 level.
Yeah, I mean, there's a lot there. The economic data, I think, depending on what portion that you look at, you can say that it's a little bit mixed, right? The jobs market has not fully broken yet. It has shown maybe some cracks in labor, but it hasn't officially broken. Inflation, as Kev kind of talked about, maybe a little bit of a concern for tomorrow here. But what I kind of want to highlight real quick before we kind of talk about the market structure, Cleveland Fed has an inflation now forecast, and they do a phenomenal job. I would say they rarely miss, and when they do, it's by 2 decimal points away. The Cleveland Fed actually has CPI headline as well as core CPI coming in lower than the street's expectations. So that's actually a bull case. If they're right, and they've been right pretty much this whole cycle, let's say, for the most part, outside of COVID-19, if they are right, we might not see as aggressive a CPI and CPI headline as well as core CPI for this print. The next print is definitely going to be a little bit more concerning. So I think that gives you a little bit more of a bull catalyst there. This market has had a really nice run off the lows, Tom. If you actually look at the performance, though, I would say that the breadth and foundation of this market has been pretty good. It's not... Industrials has outperformed tech on a risk-adjusted basis. That's something that you don't usually see in a dead cat bounce. You could say the same thing for utilities, right? There's a lot that's actually been under the hood that's actually been working pretty well, and there's still some value plays that are still out there. Should you keep your head on a swivel? I would, if you're kind of talking about just the Mag 7 and that's your only exposure, because people are used to doing that over the last 5 years, 6 years. But if you actually look at some really decent chart setups, the risk reward is actually pretty decent right now. So I think the inflation picture tomorrow, I would be concerned. Kev's right, especially on energy. We probably won't see the full impacts of the energy move to the upside in tomorrow's print, though. We have to be mindful of that. But if the Cleveland Fed's right, you could have an upside surprise in the markets for tomorrow. And I think, this is my just theory, conspiracy theory here, President Trump, especially over this weekend, June 14th, he's having that parade. Obviously, we have the stuff going on in California. He's trying to squash that. He has trade talks going in. He would probably love to see all-time highs going into the weekend. That's just my take. I'm sure he's probably telling those trade representatives, get something for me to bring to the street and don't walk away until you do so. So I think that makes it a little bit more of a favorable market right now.
Yeah, I think that's everybody's goal, to get some positive news out of this. And, you know, meeting for a couple days in a row, I'm sure they're not going to come out and say, hey, we're at a stalemate, we're going to raise tariffs again. Either side coming out and saying that, I think that's pretty far-fetched.
I don't know if I got room for my grapefruit.
Leading to some of this optimism in the equity market. But Kev, you
This was
mentioned
good
earlier,
salad.
yields. You know, we got a 3-year auction later on this afternoon or after the
I added
show
something new
ends.
to it, celery.
You know, it feels like, you know, the settlement or at least a consolidation of yields at this point is also lending support to the equity market, where we're not getting that volatility in the bond market right now, and that's actually a bonus.
Michelle, can I get you to come over and do my dishes? But you didn't hear that. Oh, she did hear it.
Kev mentioned the 30-year bond. That'll be one everyone will be watching for sure.
I didn't stutter.
That's just a bigger measurement. But the benchmark will be the 10-year. So, yeah, we're watching auctions more than we've ever watched them, Tom, and probably for good reason, right? We have more money to raise than before. So, not a lot of earnings. Oracle and we got Chewy today.
Woo!
Oracle and Adobe are the biggest names of the week. We're getting late in earnings season, but yeah, I think headlines and inflation, you know, are going to drive us here. And like I said, just be careful of the level of the VIX, because at 16.9 on the VIX, it can go lower, Tom.
Yep, it definitely can. Kevin, I'm going to give you one more opportunity, KG, here, as far as, you know, valuations on the S&P 500. We mentioned it last week with Nathan Peterson. They're getting up there, you know, the forward PE about 22. So it's elevated, right? But then
I'm going to go
earnings
get me a Tai Chi, and I'll be right back.
down this year. That doesn't equate
A Tai Chi.
to, you know, higher asset classes
Oh,
here
that's
for
funny.
equities at this point, does it? Or is that just maybe a low bar getting set here for equities moving forward?
Yeah, well, valuations are never a good gauge for what's going to happen in price, but it is expensive. But I think the market's, once again, kind of pricing in the fact that we're not going to see tariff rates being re-rated higher here. I think we've also come to the notion here, into an agreement that we will still see tariffs of some form, 10%, 15%. The market might have that kind of built in. And if you kind of think about it, a lot of the earnings that have been pulled is because of the uncertainty when it comes to the tariff policy. So if we start getting certainty back in, maybe those guidances become readjusted, come right back into that earnings multiple here. I think the market, I hear what you're saying. The market is ahead of itself in some respects, especially technically. We have
The market's ahead of itself.
to focus on here. But
Alan, you called for a big pullback.
Really meaningful reversal in the downside, like a 20.
Did you miss it?
Style market here. It seems like the market's pretty much dug in that what we've experienced is the worst that it's going to get, and maybe
He's making up excuses.
Even though the economic data could get a little bit hairy, and Kev's right. The problem that you have with the VIX is that it's so low. If you kind of look at the curve itself, the spread of that curve, it's so low, it's actually below the one standard deviation range that we've seen for the last year. I would actually be a little bit more concerned that you have a re-rating higher rather than a re-rating lower for volatility. If it goes lower than this, it's going to be a very boring intraday trading session for a lot of those scalpers that are out.
Yeah. Hey, sometimes boring is good here for equity markets. There's not a lot of news moving equities at this point. All right, guys, let's take a quick break. When we come back, we're going to take a look at Alphabet, the Google parent stock. Is still off about 13% from its all-time highs, getting a nice 2% pop today, even though maybe there's some reports chatbots taking away some of their search business. We're going to talk Google Alphabet when we come back. Stick around.
Do. Do do do.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Fast Market here on the Schwab Network. We're talking Alphabet. The stock's having a nice day today. Maybe on the back of some news out of Reuters, but we're starting to see some information that OpenAI plans to add Google cloud service to meet its growing needs for compute at this point. Kevin, when you look at this stock, it's definitely out of the Mag 7 names, the cheapest on a valuation basis, but maybe that's due to, some of the headwinds out there. They're losing search business to chatbots, the potential breakup, maybe the divestiture of their Chrome business.
Pepsi reversed their...
going to be used, Google search on their platform. I mean, there's a lot of headwinds, and then you throw in some some fines out of the EU.
Pepsi might be a buy.
To be a recurring event, right?
Pepsi has had a pretty good sell-off here. Rose, I think if it breaks 131.71, it could be a buy. Actually, let's do a triple top. 132.21.
the responses with ads, that's also going to kind of deter the experience. So there is a kind of a double-edged sword there when it comes to the chatbots just in general. And Google has other streams of business here. It's a decent company. It seems like Sundar is doing a phenomenal job now. I mean, people wanted to see him out a year ago, but now they love him. So as long as they're able to just continue to maintain and show that they can print money, I think the stock is on the way to continue to see some gains over the next couple of months here. And the charts really kind of tell you that. If you look at the weekly chart, you do see a nice little crossover. This happened just last week. MACD cross in a bullish formation to the upside. And usually when you go back and look at those technical crosses, it really does say that some follow through here is warranted for this move.
Yeah, 50-day moving average down at 161, so only about $19 above that at this point, but it had been trending lower before turning positive. KG got an example trade for us here. Walk us through it.
Yeah, looking at the July 18th 190 calls, buying this for $2.85, so the max loss on the trade is $285. Unlimited max profit with a break-even point of $192.85. Once again, once you get to that around that 195-ish area, that's a pretty key area, a resistance point for this name. But it gives you a little bit of time, and if this momentum is going to continue, this trade would be something that's going to potentially profit to the upside here. But you do need to have a move, but you do have about a month and a half in order for this move to really kind of come to fruition. If there is going to be a catch-up trade for value names that are out there, Google could be one that some large institutions might be trying to get into.
All right, yeah, let's break this one down. Pretty straightforward here on this one. July 18th monthly options, 38 days to expiration on this buying the July 190 strike calls, paying roughly a $285 debit. There's your risk, $285 per put or per call that you buy on this one. Kev, when you look at this one, it's pretty straightforward, but as KG mentioned, you need a move. That break even of 192.85 is 7% above the current share price in there. And this is that type of trade, Kev, when we look at it, even if the stock goes up to 188, 190, that, you know, it might not expand in price at all. Maybe implied volatility comes down. Maybe that call skew flattens out a little bit. So you definitely need a move on this one, but KG's getting
Tesla's on fire
on this one, Kev.
So buying the July 18th 190.
Well, I like that Pepsi now. The more I look at it, the more I like it.
Trade, but there is a time where this could be the most effective trade to do. Is it always? Probably not. It's not a high probability. You're paying theta. Your break even is the long strike, which is $10 above, plus the debit paid. So there is some risk there. But however, if you're right, and if everything lines up where Google Alphabet were to move towards $200, you have an unlimited upside potential. Now, we don't talk too much about naked long calls on this show, but there is a time where that might be it. If you think something is about to burst in Google Alphabet to the upside, remember, it's still a risk-defying strategy. It's got the chart that looks like the hockey stick. You know, what you pay for this call is what you have at risk, and you have unlimited upside exposure. Just understand, you're paying theta. You need it to happen in the next 38 days. The good news is, Kev has given himself some duration for this to happen, but you are betting on a large move to the upside in Google Alphabet.
KG, when you look at this, you know, just buying straight calls like this, you know, needing to move to the upside, it does give you a little bit of flexibility, right? You're paying $2.85 per spread or per call on this type of trade. So when you're looking at trade management on this, say you get that move up to 190 in the next week or two, and this thing expands to $5, do you look to maybe, you know, cover some of your deltas to the upside? Do you just sell a call that's above the 190 strike to offset some of the costs, maybe lock in some gains? Do you parse part of your, your position that you have on it? If you have multiple calls that you purchase, what's your outlook here?
Yeah, I mean, if you have multiple contracts, you can definitely try to take off some, and maybe you only leave the ones that kind of find finance the trade on call those runners. Or you can look at a 2-to-1 risk reward ratio. That seems to be a decent one, but it kind of just depends on the trader. Here's the thing. We bring out a lot of diagonals and calendars. The thing that you get concerned about with Google, and you can see it with the price action right now, is that it moves too quick for a lot of those diagonals and calendars. And this is a stock that's right now average trading range every week, pretty much for the last, let's say, 4 weeks, 5 weeks or so, has been around $12. Before that, before we even had the drop, around $10. So it's definitely within the realm of possibility that it can get up to this level. You just need to have, obviously, some buyers continue to step in. You have a seasonality of equities doing pretty well in June and July, and you have announcements like this. So yes, there's definitely some risk there, but when you kind of look at it from an overall portfolio standpoint, I don't want to call this a lotto, but this is one of those ones that you got to be willing to lose the premium here, but this could actually turn out to be a decent trade if it goes in your direction.
All right, good look at the straight call purchase there in Alphabet. All right, and thanks to Kevin Green, Senior Markets Correspondent here for joining us. But coming up after the break, we're going to be joined by Andy Swan from Likefolio for a look at sentiment data in Chewy, the e-commerce pet retailer stock, up about 35% so far this year. The bar's getting high in this one going into earnings tomorrow morning. Stick around.
Trading at Schwab is now powered by
Trading at Schwab.
Unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs.
60/30s are just right outside the money at $7.
With up-to-the-minute news and insights. Trade brilliantly with Schwab.
Do-do-do-do-do-do-do-do. Jimmy called the bottom. Look how far we've gone up since I did.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
In the biz.
See something from Schwab?
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl?
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
60-29-13. Whoa. I think I'm going to short this thing.
Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Andy Swan, co-founder of Likefolio. Welcome to the show, Andy.
Thank you.
All right, so we're talking Chewy. You know, this stock was dead in the water for a few years.
Yeah, it was.
We've seen a little bit of a resurgence in some of their growth numbers, and with the stock, basically at over 1 year highs. Are you guys seeing the same kind of data that the stock buyers are seeing here at this point?
Yeah, we were seeing the same kind of data that would have led to this sort of stock appreciation. But now we're starting to just see some yellow flags. We're starting to see some cracks in their digital traction. When we look at web visits for Chewy, it's pretty good. 14% up 14% year over year, but that's really flattened out and decelerated over the last couple months in a pretty concerning way. And then even more concerning than that is app usage. The Chewy app is where most of their most loyal customers are using to make purchases. And we're seeing app usage down
Washboardjim is looking at the 60-15 puts. Repeat, 60-15 puts with 32,000 volume at $3.60. And I will buy 2 of them if it'll let me have my order. There it is. There it is. Okay, we're going to find out. We're going to find out here. This is risky. I have 2 contracts, $720. Uh-oh. Uh-oh. Oh, Jesse likes the 60-35s. Oh, God. This is just rich risky. Now they're at 350, 340. Ugh. Okay. Well. There it is, my number right there. 60-29-13. And now we hit 12. So if it breaks here, I'm going to get out. Do you understand? One penny off. What's that concern on your face for, Jim? A little too early. Okay. Oh. Well, well. Don't lose track, Jack. Make a new plan, Stan. Don't need no corduroys. Just listen to me. Let's drop. Back to 360. It's not looking too good. Well, what's the deal here? Why ain't this? I don't get it.
At or near that $45 strike, Tom. That's the theory that would cause you to put this trade up.
Yeah, and the option market pricing in nearly a plus or minus $4 move either way. That's why you're collecting so much credit on this, because implied volatility levels in that option series where you're selling this short iron butterfly. That's why you're collecting so much option premium.
We're squeezing between the 21 and the 9.
Trade, but you need some consolidation at or near that 45 strike. Pretty decent range on that one also. All right, Let's take a quick break here. When we come back, we're going to take a look at Microsoft. The tech giant is near all-time highs and has regained the crown as the largest market cap out there for companies. We're going to stick around. We're going to talk Microsoft when we come back.
This is not working. Well,
trading at Schwab is now powered by Ameritrade, giving traders more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Microsoft, let's get a quick look at markets, which are near session highs as we speak, awaiting some clarification on those talks between China and the U.S. The S&P 500 up nearly 0.4%. The Dow now up over 90 points, or 0.2%. NASDAQ 100 up 0.35%. And the Russell 2000 leading to the upside again, up 0.7%, getting close to its 200-day moving average, but still about 12% off of those all-time highs. You can see here from the heat map. It's still mixed as far as the 500 stocks in there, as far as between red and green. But we've got some leaders out there. Tesla up 3%, Google Alphabet up 2%, NVIDIA's positive, Meta Platforms is positive, but Microsoft, which we're going to talk about now, down a little bit here. So good look there at the markets. Little bit of optimism going into maybe some commentary from the U.S.-China trade relations here. Now let's get into this discussion about Microsoft, because the stock settled at record highs yesterday, coming off here just a little bit in today's session. Kevin, it seems like last year all we did was sit there and pound our table, scratch our heads going, hey, why is Microsoft just flatlining, underperforming everything? It wasn't participating in the rally into the end of the year. It hit bear market territory first. It was a lagging member of the Mag 7. But now you've seen this resurgence since its last earnings report, and all the way up to all-time highs.
Yeah, it's amazing how different a short period of time can do in a name. I mean, the last 3 months, it's up 23%. Tom, that's a massive move for such a large cap tech stock. But that being said, what business are they in? They are not dominant in, right? Everyone's talking about, OpenAI. Oh, they invested in OpenAI in 2024, Tom, before it was even popular to invest in OpenAI and all this. They were early. How about Meta's deal for energy?
It's had a pretty good pop, that's for sure.
Right? They're so ahead of the curve on all these moves. They're a first mover in a lot of things.
Microsoft.
The stock is
I don't know, this thing ain't working out. This is the third time up here now, so it might break out. If it does, I'm out.
A solid business model, but they've grown so much, right? Is it too far, too fast? This gap in that chart worries me over the long term. And let's face it, they're so widely held. They're in 3 of the 4 indices. They can't escape a global sell-off like we saw. So yeah, this name will go with the S&P 500, although right now it's outperforming actually.
Yeah, and I think part of maybe the reason that we're seeing the resurgence here in Microsoft, besides the 0.7% pullback that we're seeing today, is maybe some of those investments in ChatGPT and OpenAI, which is nearly $13 billion, starting to pay off. There was a report that OpenAI seeing $10 billion in annual recurring revenue, and that's up from 5.5 billion at the end of 2024. So maybe some of those investments starting to pay off here. But as we mentioned, this stock lagged throughout much of 2024.
Studio, did you get out?
Overall market here, but near all-time highs. So, Kev, I looked at a strategy that, hey, if you think this is going to continue and it's not immune, maybe it's overextended on a technical basis because that RSI is still above 71. It was above 76 on yesterday's close, so it's overbought on a technical level. That doesn't mean it can't continue to move higher, even though we're seeing that pullback. So I looked at a strategy that takes advantage and gives you some exposure to the upside, but you don't need it to explode to the upside, maybe 5-8% or something like that. You want it to continue to grind higher here. So looked out in the July 3rd weekly cycle, so just a few weeks until expiration on this one. We're going to buy an unbalanced call butterfly. We're going to buy one of the 470 strike calls that's currently just at the money. Sell 2 of the 485 strike calls, that's where you want it to go, and then buy 1 of the 490 strike calls. Paying a debit of roughly $5 on this one. So you've got $500 in risk on this trade per spread, right? But max profitability can be up towards $1,000, and that's at or near the 485 strike, which would be more fresh all-time highs on this one. But even if it goes above 490, it's a double in profitability. You lose a little bit, but at the same time, doing the unbalanced call butterfly as opposed to just maybe buying the 470, 485 call vertical, it's going to cost you less. You're going to have less risk, less exposure on this one. But Kevin, this is pretty straightforward. Your break even, anything above 475, that's only about $5 higher, is going to be profitability on this one.
Long a $15 call vertical, short of $5 call
Yes,
vertical.
what am I doing?
Spending about $5, I mean, on a spread that can go to $15, Tom. So there it is. And if you're right directionally, and Microsoft moves
whatever it is,
you're
it's very unprofessional.
Or losing that profit on the upside, although it would peak out around the 485 level and then come down slightly, but hold profitability because you're long a bigger call vertical than you're short. The risk on this trade is the debit paid and the target $485, Tom.
Yeah, and Kevin, when you look at this trade like this, it's a bullish trade, right? But if you think the stock's going to go lower, maybe it's overextended, it's showing that on a technical basis, it's rallied so much to those all-time highs, and it's not immune to market, moves at this point. So if the market pulls back, Microsoft may pull back also. I just looked for reference, Kevin, just buying this same type of strategy, but buying it on the put side in that same July 3rd weekly cycle that expires in 23 days. If you bought the 470 put, that's at the money, sold the 455 put twice, and bought one of the 450 puts. So same setup, buying a $15 wide bearish put vertical and selling a $5 wide one to offset some of the costs. That'll cost you about $3.70 debit, so less debit. But Kevin, that would be the way that you would go if you were more bearish on a trade like this. In this example that we've got, a bullish call butterfly, but the bearish put butterfly a little bit cheaper, but you'd need to move lower and kind of go against what we've seen in the market.
Yeah, I don't know the exact prices, but it sounds like the put skew is a little higher on
We're
the put
about
side.
now.
And so you get more premium on the
I don't know if I want to add or not.
which would lower the net price of the butterfly if that's the case. So yeah, a little bit cheaper entry point, net debit on the put side here, but same idea, right?
Pepsi
Buying
broke
a
out.
Put vertical, then you're selling directional play. You're about 22 deltas long on the call side. I'm not sure what the put is, but in this case, your long deltas, these are directional butterfly trades. So if it's the call side on the upside, it's bullish. Put on the downside, it's bearish.
Yeah, hey Kev, real quick here, as we let you go, stocks at all-time highs, or not at session highs, not all-time highs, but it seems like the momentum still remains to the upside. Still awaiting.
Rose, is it unprofessional to trim your nails while you're on voice? Yes, agree. Michelle, you're a rebel. You should love to trim your nails live. Now they're all over my clothes. Yeah, it definitely broke out.
Look at your everyone has from yesterday on ES.
You'd be quite impressed with my trim job. I might have got my left hand nails a little shorter than my right. Are you okay, Magnificent? I mean, Funky?
Have you heard of Magnificent?
Yeah. I heard that.
Look at your aftermarket has on ES yesterday.
No. I'm stuck in the puts.
That's what I'm saying. I don't know that either.
Closing in on a double top for today. Ooh. I think a $6 drop would be nice. Okay, we're back out of support here. And it failed that, but we got the 21. 21's your next one right now. We're at 275. Ooh, there you go. The next one's $4 down, 60.23 for a double bottom. If this doesn't hold. $3. Huh. I did the right thing. Maybe. How you looking now, studio? Don't rebound right yet. Another big drop. $7.20 135s. It was 290. Could get out of these and just call it save the day. The 50 SMA is your low support. 60, 24, 52 is your first one. That's 2 minute. Ooh, shit. Okay, on the 1 minute we hit the 60, we went below the 63. It's right at 60.23. $60.23.67. Are you a Russian spy? Was I funny? Oh boy. I didn't want to see that bounce back. A plus, shit. A. We're being very generous. Well, hell. You're being generous. If I spelled that big word right. A G minus. That's more like it. Could have got out even. Okay. Pepsi looks very healthy today. Damn it. It's a monster. Better go outside and walk and take out my trash and come back in. I haven't took a trade like this in a while. Another big one. Oh, yeah. God. Yuck. So I got I hate to add on the risk on this one.
There you are. Hey, that's that zone I called.
Yep.
Now, if you want to input, this probably ain't no bad idea because your RSIs are hot and you're in a freaking reversal zone. What the hell made it pop like that? I was on the phone. I just looked to my right. I was like, Jesus Christ.
Yeah, it.
I don't even know if I want to go against this trend, even though I know I'm right.
So if I had an average, 18 times $2. Ooh.
I'm inputs. I know I'm right. I don't know why I keep doubting myself.
Well, we'll see how right we are.
Come on, there you go. Sink, you big heavy bitch.
That run just pushed it a little bit too much out of the money now. What damn? What'd you get back in it?
60/40s. I can say that pretty easy.
You're crazy, studio. That's called going way against the grain.
Hmm. Yeah.
If you go back in it twice, I need 205.
Hey, there's your drop.
Yeah. That's probably it too. 3 black crows.
You think so? I think he could touch that 63 again on the 1 minute on the S.
There's my even spot right now. 205. Studio, think about what you're doing here.
If it does have 63, I'm getting long again. At that.
To go up?
Mm-hmm. Yeah.
On what?
The gamma exposure for SPX is 60/40.
On slash ES?
No, SPX.
Okay.
So the gamma exposure is 60/40 on it for the day, so.
Well, I'm at the 21 right now. With a tweezer bottom. And it's at a yin yang. We are blessed. I will be if we get another big knife.
My man still just takes the trades we got. He doesn't argue, he doesn't do anything. He just takes 10 trades.
Yep. Oh, he has.
He trusts me to babysit his kids, I think.
He'd trust me to babysit his girlfriend.
Nobody would trust you to babysit their girlfriend. Not a human being. Here we go. Let's hit that 63 on the 1. I'll get back in.
Michelle. You don't trust me?
I'm trying to do an install on the computer and freaking watch this crap on the other computer. It's not working. I have to do my real job.
Yep. Can't neglect that. I got suckered into doing something on my job, become more or less a property manager, and they give me little bonuses for it, but decline. This is what I did yesterday. Do. Yeah, I'm kind of upset I didn't take advantage of that Tesla run. It's what you get when you get bias. We came back and touched the orb, just like Jimmy said we would, and I didn't jump in at 315.84. Pepsi almost hit my 132.21 rose. $20 more pennies, 18. I need a little bit more drama here on my SPX.
God, if Besson gets freaking that Jerry will get great as next day.
If we get rate cuts, we're going to...
Bet on it.
Yep.
Air from all over the
There's 205. Come on, give me. I think we can get to the, well, we'll see here. 69, a little above 60.29. Oh, yeah.
Just hit the 63 on the one, I guess.
Yep, there it is right there. Let's see how much I can get out of these. 230. I'll take it. I'll pull a funk right there. Get what I can. I had 18.
Nobody ever went broke closing it out green.
Yep. I'd say I got lucky.
Man, I know where the zone was.
Yeah, you did. I kind of knew.
All I had to do was look at that damn aftermarket yesterday on ES and see where it predicted. That was clear as day.
I keep seeing the aftermarket from yesterday, and it's lower than what it is now. Am I right or wrong?
So, for ES?
Yeah.
One moment, please.
Well,
So
yeah, okay.
At 8:30 last night was the high.
Last night, yeah, I got you. I kept thinking that was just today. Well, I'm not going to complain.
I've been still pushing down.
I got 230. Oh, shit. 255.
Yeah, 5-minute candle on the ES just after 21.
Well, that would have been pretty. $50 a contract times 18. Yeah. But you never know. Whoops. Wrong room. No, that was the right room. Oh, the professor's in my room. Everybody, I want to introduce you to the professor. He's a real good trader. I seen his name in here and I said, I'm in the wrong room.
So I thought that he actually traded off game exposure. Am I wrong? Because game exposure for STX was at 60-40.
He trades off of a lot of stuff.
When I used to watch him in FUMC, it used to be all about gammas. Yeah. I don't like the way this, I mean, this could actually freaking bottom out. I don't think the 63 holds on the 2-minute.
We got a triple bottom right here coming up.
Yeah, but everything's getting ugly.
Yep. Well, I'm just happy I got.
3 on the 2.
I wasn't looking too.
If it don't hold here, it's going to go all the way down to that 60-27 level.
Or 60-23, 67.
Yeah. It's about the same on SPX as ES.
I'm just glad I got out of that.
What are your puts up to now?
245.
she wants to dump so bad.
Oh hell, I mean, did better than that. Yeah, he's got gamma on that chart. Thank you, Jesse. I had to put 3,500 in it though.
Oh God. You put 3,500 into a trade?
Yeah.
Oh God, you have balls of steel. There's no way, son.
I usually, I mean, that's over my limit. 15's my limit.
There you go.
There it is right there. We'll see if that holds. We could see the 200 SMAs right at 2023. I mean 6023.
Yeah, but I want to see ES after 200.
The 6035.
If it don't get it, that's the plan.
Yeah, 60. This is where I'd like to buy it. If I was going to buy right now.
You should have a bunch of big bottom wings.
And I missed it. The 6035s. Yeah, Ripster said something interesting here on a. If I can find what he quoted. Let me see if I
Why?
can.
Because the VIX is so low?
Yeah, did you see that? The
I heard
VIX.
when you were talking about it.
Yeah, here it is.
But I thought that made contract prices lower. I didn't think it actually affected the way that they move.
It does make them lower. That's what I swear what I more or less said, but and then I read here what I
They're
heard.
moving like crap today.
When the VIX drops towards 14, 15, 16, volatility decreases. You won't get $5 or $6 move on a SPY or the SQQQ.
Yeah, dude. Really being stubborn about giving me the drop I want. But the 1 minute looks nasty on the ES, like you're rejected the 63, you're staying under it, the AMA cloud's red, you can't break the none. There it is. Keep going.
Testing 1, 2, 3.
Come on. There you go. Come on. Push that. I'll load the 6035s just in case.
Here we are at the 200 right now. EMA, and we're going to get ready to touch the SMA, and I think it'd be a good spot for a scalp. There's $50.
Maybe $40 contract on the 60-35s.
Back down to 215. Didn't want to break the 9 on the 1 minute. 5, 10, 15, 20, 25 minutes. 5, 10, 15, 20, 25. I'm going to step out for a second, go take the trash out, and I'll be right back. Just got to get some stretch my back.
A page out of Elon Musk and Tesla's book of just these tremendous promises with very little to show for it. And now we're a year later and we still have very little to show for it. It does kind of seem like they kind of got back to their roots of not over-promising things. Do you think that makes sense, or did I miss something?
No, I think you're right. I mean, I think just looking back again at last year and all of the things they did, you know, I think the observation would be they started with notifications, writing tools, some of these things, so that they could give people an idea of what you might want to do with AI at an everyday user, level. And I think this year it's more about letting the developers now take advantage of that. And, to your point, right, I think we feel like those of us at the bleeding edge, AI is moving really fast, and it is at a technological level, but it's also moving really slow in consumer adoption. And so I think we have to balance those two things about bringing AI to people at the right time. And Apple has always been, and I think anybody who invests in this company, would remember that this is a company who thrives on the back of their developers, their software developers, their proprietary developers. So giving them the ability to leverage AI is, I think, a huge story for the software development community that, again, makes their hardware more attractive.
So as we kind of tied this up and we move on, it does look like the market kind of looks at it as like it wasn't a win, wasn't a loss, which I think is actually good news for Apple shareholders. There's a lot of hype around this event. It easily could have disappointed just simply because of that hype. But when we look at the prevailing trends in Apple right now, it's obviously underperformed, but it had that huge run up. Who knows how much we can discount, but I think about the hardware story. It's cloudy how much they're going to be able to maintain margins with the trade uncertainty. But how big of a story is this Apple App Store litigation margin compression story on services that I don't know is getting enough coverage?
Yeah, I mean, I think you hit on a couple of different things, just business model-wise, right? Hardware is remaining relatively flat. I don't think anybody believes that changes this year, that we see any kind of a cycle move to a bit of hardware, and that's true across the industry, so not just to Apple. I think the services side of this, again, if you walk away from yesterday and you say, this is a opportunity for services, for Apple to command or bring some more economic value by way of not just advertising-based apps, but subscription-based apps, which they would capture, a percentage of that, or even subscription services for AI for Apple, because a lot of this is expensive. It's going to have to be monetized in a new way. And I think there's this hope that where they go in services captures some of this value of perhaps some changing business models in AI. But we don't see that yet. I think that's the hardest part, is we don't know the economic implications of this. We hope there's more money to be made here, but we want to see the first fruits of that before I think people can be super optimistic.
Ben, last question I had for you. It looks like they're building the foundation, but how far behind are they when it comes to AI? Is this stock still a must-own just simply because of its size? Or are some of these names, whether it's Meta or you throw any name you want to put in there, Alphabet, NVIDIA, are these names just further along in AI that when it comes to growth, Apple's just not in the same conversation anymore?
Yeah, I mean, I think there's a hardware question, obviously, when you look at NVIDIA, right? They're going to benefit from hardware sales of a massively growing TAM. And so there's only a few names that are attractive enough that in a build-out, an infrastructure build-out, that's the case. I think, nobody would disagree. It's kind of hard to see where the hardware growth comes from within Apple. It could be, a couple percentage points here and there. I think the real question, again, is the services side, the economic side. Can they capture?
I got my plan in place.
Looks like we may have lost Ben there, but that was Ben Beharin, CEO and Principal Analyst for Creative Strategies, with reaction to WWDC, as well as general thoughts on Apple. We're going to take a short break. We get back. It's time for Under 30. We got HP Enterprises on the mind. We're going to be joined by Jeff Pierce, reacting to the partnership announced with NVIDIA regarding a supercomputer in Europe.
Put it back in there.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
I'm gonna count how many minutes I was early on puts.
Welcome back to Extra Investing. It's time for Under 30. Jeff Pierce is here, Senior Manager of Derivatives Trading for Charles Schwab & Co. Jeff, good afternoon. Happy Tuesday. Let's talk some HPE. All that sticks out to me here is a couple things. Supercomputer, that can't be bad. Europe's been spending a bunch of money, that can't be bad. But then there's this company they're partnering with, NVIDIA. Is there a better company right now to be partnering with? What do you make of this?
Yeah, I think it's an excellent position for HP to be in right now, especially considering some of the moves they're making within their internal business. To your point, though, they're partnering with NVIDIA. They're going into Europe, which has this potential for a big AI offering in the future, a lot of market share there. Partnering with Germany's supercomputing center to build a new supercomputer. At the conference in Hamburg, Germany, the company said that Blue Lion, which is going to be the name of that supercomputer, will be available to scientists in early 2027 using NVIDIA's Vera Rubin chips. We know that those chips are taking off. They're kind of the successor to that Blackwell lineup. They've also got the Vera CPU, which is now their first custom CPU that's going to be built with those GPUs. And this investment for NVIDIA has made a lot of sense as well. You know, they've been trying to push more into Europe. They've got Jupiter, which is another supercomputer that's used at a German research institute. That's officially become Europe's fastest system. As we look at some of the impacts for HPE, they've been struggling a little bit. They've slumped this year due to some disappointing financial results, the broader market weakness that they've seen. They recently reported an earnings beat on revenue and earnings per share. But they tightened their outlook a little bit. Part of that was seeing some better visibility in the conditions and some stabilizing demand. The good news is their AI system, the orders we've seen in AI has really helped boost that revenue for HPE. So news like this is certainly welcome for investors.
Yeah, it looks like it's going to be, at least if the plans go through, built in Germany at that supercomputing center. But when you look at how the stocks reacted, I know it had a nice move kind of post earnings, but it wasn't able to hold on to all of those moves or that move intraday. It's been in kind of a tight but steady uptrend going back to the lows of early April. When you look at this performance, you look at sort of the lack of oomph around.
Well, we hit my 60-23 right here, 67. And they got down to 157. The 60-35s. And it's probably right around where Funk was talking about, maybe. Yep. Am I right? Yep.
Still think you can push a little bit more though. You can't break the 21 on the 1, you can't break the 63 on the 2, you can't break the 9 on the 5. Like that's a lot of can't get nowhere.
I don't know. I probably would have took it. I don't know. I would have probably took it because of that hammer with a tweezer bottom off 3 black crows.
Yeah. Well, I posted in chat, but I'm telling you right now that the ES 6024 level is huge.
Yeah.
It is the top of the orb, the 200 SMA, and the VWAP all stacked on top of each other.
Where we are now, or
No. 60-24, so 6 more points down.
Oh,
yes.
I see.
That is huge support.
Yep, that takes you right to the top of the orb on the SPX. At 60-19, that's 6 points down. Right now I'm having a jar of prune juice.
Yeah, I see that.
I actually like it.
I would too if I was like a small block 350 or something, but yeah, I'm not.
Angel, would you drink that with me? If you're awake. Francisca? Would you like a shot of prune juice with Jimmy? Oh, really? No wonder I never got a date. That was one of my best pickup lines. Damn, Tesla's. Always clean as Jim.
Hello.
Yeah, what's up, baby?
Good afternoon. My name is Emily. The new Trump administration has changed the Medicare policies for your state of Missouri.
She has.
To proceed with checking your available benefits, I need to confirm you have both Medicare Part A and B, right?
No, I don't.
Sorry, but you don't seem to qualify for the plans that we have. Have a great day.
Well, that sucks. Would you like to have some prune juice with Jimmy?
You ever gonna block that number?
I try. It always comes up a different number.
Then, are you on the no-call list? The national no-call list?
Probably not.
You need to do that immediately, number one. That would cut down severely on that shit.
Would it? How do I find it?
Just Google the National Do Not Call Registry. Then they get fined if they call your ass.
Hmm. I guess you get to a certain age, huh?
Yeah. Keep coming down. Come on. Give me just a little bit. You're definitely in a support zone right now, but I want you to give me a little bit more. Ooh, nice. Okay, I mean, this is getting pretty close. Size oversight on the 1 and 2. Here we go. There's the drop at the bottom of the support. There's
Yep.
the
I just grabbed some right here. 105, 110.
Yep.
God.
Absolutely, God.
We didn't see that. Well, I'll add more. Shit. Okay.
That was a nasty girl.
60, 30.
Contracts are already back even.
Yep. $110 and 110 and 85 calls. The 60, 35. Why'd I get them? Well, I got them.
Nobody ignored you guys. I had a plan to second my plan. bottom of the orb instead of top. That was nasty.
Let's hope we can get a rebound here. Because I got bottom of the orb at 691.
I mean, you went huge off the bottom of the orb, so that was a shitload of stop losses in there.
Yep.
All the RSIs are oversold right here.
Inside Harmony right now. But I don't know if it means that much on a 1 minute. I'm going to leave out of here and get paper towels.
Here, top of orb right now. And be walk. They could push the sucker into that 6007 zone that we kind of set up earlier today.
Yep. That's what I'm worried
You
about.
up in the top of orb may be resistance now. I thought they were going to be support until that big ass knife.
Average is 97.5. Heck, I don't even want to look at my puts right now. Shit.
Yeah, don't do it. This thing's great in the head and shoulders on the 1 to 2.
God dang, man. What, 300%? 400% on the puts?
Yeah, but it's super freaking, like, trying to hold puts when the trend was freaking strong all day.
Yeah, it was.
That would work you mentally.
I gotta see my timing on that one.
They want to push this thing into that next zone.
My, that would have been a 300% or 400%. Good call on puts. Wonder what happened there.
What's your average?
Who, mine? 95, 97.5. Oh, I know why. I'm messaging the professor to use the F word. I thought we got rid of the cussing thing. Okay, we need a little movement here. Break the 21. I think if we break the 21, we'll break the orb. The 60, 19, 63 area. If we don't,
See. take this and I will literally murder him. Are they dropping trees next to us? I mean, sure as hell sounds like it.
Dropping trees? Outside?
Yeah.
Here?
We've got a couple.
Oh.
We've got a couple of dead trees that I've been wanting to take down.
They might be.
No, they are. I can hear the trees dropping. Well, obviously ain't very good then. That's just... He probably didn't even hire anybody. He probably just called his cousin Bob. They just dropped one tree into another tree, which ain't good. Good sign.
I got some big old, I don't know, pine trees or something on mine. They were Christmas trees, now they're huge. I was going to put a little fort in there, but now I have to cut a couple down. Well, we got us an ascending triangle now, so we should be able to go a little bit to the upside here on the 1 minute. But it's got to do it fast, because if it don't, it just absorbs the price action.
You're finding decay at freaking 130.
Yep. I'm just a little bit too far out of the money now for... I'll watch Netflix here. So if I bought 30 more.
This APLD, this applied, it's worth watching.
APLD?
Mm-hmm. On the 1 hour, like swap it to the 1 hour chart. So you have a big ass support zone at $11.30. and you also have the 200 SMA that just creeped into that zone. So if it hits, like I've got my alert set for 1135, if it hits that 1130, 1135 zone, that's strong ass support.
It's had a pretty good bounce too.
Intel had a massive run today.
Intel did. Just now, yeah. Why is Jim so quiet? Because I'm stuck in a trade, I guess. I'm just kind of, I don't know. I was meditating, kind of looking at stuff. I'm in the 60-35 calls. And I'm debating if I need to add or just get out. And I like the ascending triangle. So I'm going to stick around just a little bit longer here. Still got another half hour, 45 minutes, another hour we could sell off. And we could hit the bottom of the orb and these things would be worthless. I was kind of wanting to break that. I figured we'd break it if we broke the 21, but it didn't break.
Your 2 minute on SDX is probably your best indicator. Looking at all 6 of these charts I got. So your 200, if you look at the 2 minute on SDX, your 2 minute is stacked directly on top of your top of the orb, and you're holding the 9. So you need to break through the top of the orb in that 200, or you need to hold the 9. Something's got to give.
Yep.
Every other chart's a little bit confusing. That one's got the best pattern to it. There's a glimmer of hope. This is the first candle to open above the orb on the 1 minute on ES.
Just a little bit more to go and I'll be satisfied. Every 2 weeks, I bring this in to recycle from my business.
All right, done with my install. Hell yeah, I'm ready. There you go. There's your
Yep.
nice little pop.
Do it. Break it.
Alright. You're gonna hit resistance in another 1.5. Right there.
There's 3 white soldiers to the 200.
Yeah, and that's the top of a resistance zone and the 63 on the 2 for ES.
Mm-hmm.
So you,
63 on the 2 minute, yep. We're getting closer to the money. That's what I like. And back out of that little zone. go.
Us on the show. I almost thought we might have gotten an emergency cut on April 7th or around that time, but we didn't get one. All right.
Thank you again. Always a pleasure being with you.
Thank you. Coming up next, it's Technical Tuesday. Kevin Horner standing by, and he will look at the technicals on the S&P 500, which has been holding 6,000. Many people are very happy about that. Caterpillar and Uber.
Still more or less pretty flat. Break it.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
I turned down.
With Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern.
Ooh, what am I doing here?
Schwab Network.
Almost bought more. Shit.
Welcome back to the watch list. I'm Nicole Penelides. It's time for Technical Tuesday. And
Nicole.
Senior Manager of Trading Services Education here at Charles Schwab is with me.
I always thought your name was Titellini. Now I know it's Pepellini.
Solidly, in fact, we're at 6,021. What, about 2% or so off the record highs? And And I think people are pretty happy to see we are up 6 of 7 trading days as well. Some of your thoughts on the action that we're seeing, and when you look at the chart, what's important?
Thanks, Nicole. Always great to be on with you. Yeah, we continue to watch that speedily rising 20-day moving average, don't we? Today comes in around 59.25 or so. I think a lot of traders are just going to keep a close eye on this. I mean, we are grinding. I'm looking at the action of the last 3 days, and that's really what I see is grinding higher. And that's not a negative. I mean, it's essentially reminds us that even though we're not really getting major test opportunities, the stepping in front of what's happening would clearly be a mistake at this point. So I think the level that many short-term traders are going to watch is that 59.25, the 20-day moving average. A close below that would be significant. It would be the first time since April 23rd that we've had such a close. So we are looking already at 6 weeks of holding the 20-day moving average. So as always, if you're trading the trend, you want to look for departures from that trend. And a close below the 20-day would be a significant departure. So a lot of traders targeting that 6,100 level and 6,150 above that. The 6,147 all-time high within reason and within reach. So, you know, you could fight against it here, but man, you got to keep it small, and you don't necessarily want to get in front of something that's just continuing its upward trajectory. The momentum might be waning a little, but any catalyst we get from, cooler CPI, for example, certainly the kind of thing that can keep this market trending upward.
Okay. Well, thank you for that. A good look there at the S&P 500. What about Caterpillar? Why is Caterpillar on your radar here when we think about this industrial name?
Well, first of all, I want to say, of course, we're being led by
Tesla new high.
When I wrote to this morning, we're up more than 9% on a year-to-date basis, a little lower than that at this time, but industrials have been looking strong, and Caterpillar has made a really nice move off of its April lows. I mean, basically, everything's made good moves off the early April lows. Caterpillar up 35% from those lows, and is in process of trying to re-grab that 200-day moving average of around 358 or so. It's a very important level, but again, notice a couple of those key short-term details. We recaptured the 20-day on April 24th, the day after the S&P did. We have a 20-day moving average has already crossed a 50.
There's a resistance right there.
Dictates that.
356.55.
Three lows we've seen in Caterpillar all have tested or been above the 20-day moving average, and basically setting up a short-term ascending triangle that we're trying to break from. But ultimately, that ledge at 358, coincident with the 200-day moving average, does look like significant resistance. And the reminder, when you say things like significant resistance, is that a breakthrough that becomes very opportunistic and potentially a strong move opportunity. So, you know, upside could be that 410 level if we can manage to hold the 200-day moving average in the short run. But ultimately, looking at that 20-day, even new money could look to deploy here on the bull.
One of them.
If they were going to cover on a close under the 20-day, it means your risk is somewhere in the neighborhood of 10 points.
I wonder what did that.
Target at 410 and above comes into
little red box tried to show up.
A fantastic risk to reward ratio, something in the neighborhood of $10 of risk for maybe 50 points of upside. That's the kind of risk reward that many traders look for. So that stands out to me as well.
Understood. And last but not least, you also noted the run-up, the strong run-up we saw from Uber. All right, another great name there. Tell us a little bit about that story.
It's the first time I've seen that.
Absolutely right. Also in industrial, also doing very well off the April 7th.
Try to do it again.
More than 54%, if you can believe it. But the view here is just slightly different. A $20 range broken with the breakout we got in late April here. We moved to 93.60. And as we often see in this segment, particularly, Nicole, we talk about some of these technical analysis processes we will see frequently. Breakout and throw back. And that's exactly what we've had over the last 3 weeks from that peak at 93.60. We've built out what looks like the cloth portion of a bull flag, and then just yesterday we got outside of that downtrend line. And so some traders might look at that first trade outside of the downtrend line as an aggressive entry opportunity. Others might want to see maybe a hold over the orange line here, the 20-day simple moving average. That would give maybe a little added confidence that this is right and ready to get back into gear here. But ultimately what you're looking at is a $20 range that was broken to the upside. We came back and tested that same breakout level at 82. And if those traders that are looking at 82 as strong support want to think that they've got $20 of upside from 82, now you're targeting 100 to 102 as an approximate upside just based on the height of the range from which we've broken. So a very intriguing chart with a short-term test of that important breakout level. What once was resistance has now been tested as support. So again, technical analysis 101 stuff. Love to bring those ideas to the table here for our viewers.
Kevin Horner, Senior Manager of Trading Services Education at Charles Schwab. Thank you. Thanks so much. Good luck there at Uber and Caterpillar, and of course the S&P 500. Coming up next, we'll bring in our panel to discuss the outlook for crude oil. Geopolitical tensions are constant. What happens with OPEC? And you think about energy just across the board, nat gas and more. In the meantime, oil has hit the highest levels since April as it's been above $65. Much more. We'll be right back here on the watch list.
So that orb doesn't change on different time frames, does it?
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more.
Let me get my water. I'll be right back.
Questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Okay.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Boom shakalaka! Boom shakalaka! Boom shakalaka!
Welcome back to the watch list. We're bringing our panel to talk all about the energy state, right? We're seeing that oil's at $65. It's at the highest levels we've seen since April. People look to nat gas, nuclear, solar, all kinds of alternative energy, but we do think about just crude in general. Carly Gardner, Senior Commodity Strategist and broker at Carly Trading, and Simon Lack, founder and managing partner of
Oh, yeah!
the Catalyst Energy Infrastructure Fund, are with me. So Carly, I'll start with
Okay,
you.
Jimmy's winning.
As we see some
Woo!
recent strength in oil, what do you
150.
think is the catalyst, and where do you think oil is headed?
I don't know everything, but I do know that commodities spend more time in bear markets than bull markets, and it's fair to say that the crude oil has been in a bear market since March of 2020. Since peaking then, it's spent the last 3 years in a sell the rally type of mode, and I think we're still in that mode. The last couple of years, rallies have been capped to about $10 to $12, And so here we are. We've run about $10, $12 from the Liberation Day lows, and we're coming up against some good resistance. 65 is very pivotal. I pointed this out on this network and others. Anytime oil drops below 65, and it tends to be kind of nuclear for the markets, and it tends to get a big downdraft into the 30s or even 20s. So jury's still out on whether or not that happens, but I think we're still in the danger zone here. I know the front month popped above 65, but the back months didn't. And this is an art, not a science. It's not, things aren't exact like that. Markets are messy. So I still expect crude oil to go lower. And to answer your first question, it took a lot of, kind of a perfect storm of headlines to get this $10, as meager as $10 is. We had the, questions about the Iranian deal, questions about more Russian sanctions, U.S. rig counts dropping off. So there's a lot of bullish news, and we only got $10 to $12. To me,
I'm the happiest trader in the world.
And what do you think here, Simon? I know you're really focused on things like the data centers. You do have some stock picks for us, as with the fund and such. But you do think that maybe production here in the U.S. is taking a bit of a more cautious attitude. Where do you think oil is headed and why?
I think the suppliers want $75, not $60. And so you've seen production cutbacks in the US. We might well peak in terms of oil production this year, and the EIA is forecasting it to come down somewhat next year. Clearly, OPEC Plus wants $75, not $65, over the long run. And so then you've always got the risk of, geopolitical issue. There could be sanctions on Russia. There could be further sanctions on Iran. So I think that there's more upside than downside to crude oil at this point.
You have,
I was with you, Bobby.
What is that, Cheniere, you have Next, you have OKE. Tell me about those three energy picks there. And isn't Cheniere maybe going into the S&P 500? It was a maybe. It didn't happen on the last round. They didn't end up doing the S&P 500 changes. But there was a chance that it could, right?
There was a chance it should be. I mean, Cheniere does about half of our LNG, that's liquefied natural gas. They do half our exports. Really great company, well run. They spend a very small amount of their cash on maintaining their assets, and so they're very good. Probably some of the best cash flow visibility of any company in the sector. So we like that. ONEOK's been a little weak because they do a lot of oil business, and oil's been weak, so some fears about whether there'll be less throughput on the pipelines. Not too worried about that. Next Decade, we do like that. That's probably not a name too many people come across, but it's a new LNG export company, not yet exported, probably still 3 or 4 years away. I think it has a lot of upside. It's more volatile than other stocks in the sector, but we think that's a good investment too.
They've been $2,000.
Yeah, and where do you think, when you look at these kinds of names here, Carly, some of your final thoughts when it comes to energy, as people also look to nuclear?
Oh, shakalaka!
That would have been $2,000.
Pressure on crude. So when Russia invaded Ukraine, the correlation got messed up a little bit. Crude oil in the
Oh, shut up. $4. God darn it. 580. 630. Damn. Oh no. Oh God. No. $8,000. $8,000. Shit. Oh. Don't leave. Oh. Yep, you better go get them fixed. Oh. Don't tell me you were in that trade too. Fuck. Oh my. Where'd you sell them at? That literally sucks. That'd been $8,000. Oh my God. Funk, did you get any of them? Oh. Man. Did you turn it down? Let me hear it, Magnificent. Give me a yabba dabba doo. Oh, well, I didn't. That's enough. That's enough. It didn't do it for mine. Voice and video. Let me see here. I'm going to turn it down. Voice and video. Soundboard. Have this. There it is. Oh yeah, I see it. Yeah, I see it now. Okay, everybody go to here. I'll put it in the room so you can see it. If it's too loud, go to voice and video, then go to soundboard. Let me have another one, Funk. I mean, Magnificent. Yeah. Magnificent. Yabba dabba doo. I'll put you down to 25%. That should work. So go to gear down at the bottom of the page, hit voice and video, scroll down, soundboard, you can control the volume.
Hour.
Thank you.
What I do. Hey, so what do you bitches want to do today? I already know they're going to park it in a zone. It's in a zone right now.
God, I wish I'd held on to that, man. That was a hell of a breakout.
There's a higher zone. No way they'll push this bitch to 60.54. Will they?
I don't know what got in her crawl, but it sure bounced it up.
I think they could go to 60.54.
We broke resistance. Triple top.
What the hell? Who do these people think they are?
Oh boy. $8,000. Much better.
Soundboard down. Yeah.
Oh, much better. When you got these are you wearing headset?
Yeah.
Yeah, when you wear these headsets, man,
Yeah.
that helped a lot. That helped out a lot. I might raise it up just a little bit. No, that's pretty good right there.
Yeah.
25%.
I'm freaking loading the 60.50. God damn. As soon as I clicked it, it went from $1.35 to $1.65.
Yep. Did you get in?
Yeah.
I mean, that was a split second. You.
Mm-hmm.
Unbelievable.
Mm-hmm. Yeah, they're doing some freaking. They're doing some buying right now, Jack.
$8,000. I sold them at $150.
Oh, I don't even. So first trade I took this morning was a 60.40 at 279. Okay. Not bad. 60.30 at 3. Yeah, so I had the 60.30s at 3 earlier today. At 10:30 this morning.
Yeah. I've been
They're
paying.
11.60 now.
I had the 15s.
Oh my freaking god! Oh my god! 360. I'm out.
I just got out of these for about $5.
Literally, what did I just finish saying? Will they push it to 60.50?
Yep. Got it. The 15s went to $3,000, 29.20.
So Randy, to answer your question, I've got an 80 RSI on the 1, an 84 on the 2, and a 75 on the 5, and I'm about 3 points away from a resistance zone.
Don't
It's
leave.
gonna have to come back down to breathe.
Yeah, don't leave, Randy. Time for puts?
I don't think so. I think they're going to bring it down to this 60.41 ES level just to let the RSI cool off, and then they'll pump it to the 60.54 level by end of day.
Or bring it down to the triple top, back to the 9.
They almost always park it in an ES zone that I had marked out, so I only have 3 zones that it could possibly be in. The way the EMA clouds look, I do not think they push it back down into that 60.27 zone. So that only leaves the option of them pinning it in the 60-41 zone, or taking it up to the 60-54.
That is crazy.
There's more volume on the Intel today than there is NVIDIA and Tesla.
God, that would have been one killer trade if I'd have held that one. $20 times $1,100.
So 20 times 11.
18 times 1,100. I mean.
Oh wait.
No, 20.
$19,800.
Yep. That last one, I had 20 calls at 105. And they went to 12.20. $1,100 times 20 is what? $2,200.
100 times 20 is 2,000.
I mean 1,100.
1,100 times 20 is
22,000. Exactly. No, I had 90. They were $97. They were 97. 95.7. So it'd been more. Been 23,000 probably.
Well, Michelle, you'll have more buying power tomorrow. That's for sure. If you did not make money today, just freaking find a new hobby.
Been $22,450, but I'd have never held them that long. God no. I just love trading this SPX. I got into a little bit there where I lost 3 good trades, but I haven't lost much. Out of how many times I traded, 6-7 times a day, and only have 3 bad trades in the last 3 months. Bad ones. where they went to like nothing, you know.
Yeah.
In the 30s, they ran to 1660, and I had 18 of them. That's when I had 3,500 in. I would have done swell. I'd done real well with that one if I kept it.
Here comes volatility again.
Okay, we're getting close to that triple top breakout. $55.45s. Get one more candle down. Right about now. Getting close. Here we go. Right here. 170. $65. Now we're right there at the triple top. $155. Damn it. 5. And 125. 3 black crows. It's kind of risky, but I'm in it. Ugh. Oh, excuse me. Blueberry burp. I'll be right back. I'm in this trade, so we'll see here. He said he didn't send one today. Or yesterday. I asked all around, nobody knew nothing. 155. Didn't get my phone to work. I was in the bathroom. Well, that's put me in a predicament. Well, Intel does have a good run.
I don't want to do a freaking straddle. I can pin it here.
I'm done really for the day. I'm wore out. We got 34 minutes left. I gotta go to the recycle center and get me some paper towels when I get done here. Good advice, don't drink prune juice while you're trading. There can't be news about Guantanamo Bay grand reopening? I don't know, matey. Takeaways from Apple WWDC keynote. They're going to start pumping Apple again.
WDC. Coming up, it's options corner.
Oxy. Oh man, triple bottom. At 40.50 for Oxy, and it bounced up.
The puts are 3 times as expensive as the calls right here. I feel like in the day drop coming on.
After that huge run, I'd say so, maybe. We do have a 1, 2, 3 coming down at the 63 on the 1 minute. Might be a good shot right there, the 60-40s.
There's a tweezer bottom. To the 63.
Oh, Rob. Did Rob say he got married?
Mm-hmm. Yeah, he did.
Wow. Well, now he's making money, so he probably got him a woman. Then she'll drain him dry, and she'll be gone.
Yeah.
Okay, there's a support right here at 115. One, two, three. Let's do it. Bounce. Could have sold them here at once. Damn it.
I said it was coming. Looking at my zones.
Yep.
They're acting like they want to push it all the way down to that 60-27 is zone.
Let's go, 125. 30. Okay, we're at the 9, so this is the next idea at 140. Come on, baby, one big fat spike. Got a little wall right here, so I'm going to take some off the table. 155. Nope. Yeah. I'm happy with that. I keep saying I'm done, but then another one comes in.
Still got 26 minutes.
Yeah.
I don't really get in the last 30 minutes unless I see a lot of volatility. Like if I see huge weekend going on both sides, then I'll think about something. But other than that, I just watch.
I had two confirmations. I don't know where this line comes from, but I had the triple bottom off the 63. Then let me see where this other line come from. Well, it come from Head and Shoulders. That's on the 5 minute, so the 1 minute probably be more. I don't know. Just that peak. Double top breakout.
I might take it down 60-20 lotto. I ain't playing. None of this looks good.
60-20? God, you got that kind of money?
No, 60-20 freaking put.
Oh. I don't know.
Look at, I mean, just the chart just shows freaking the 63 VWAP support zone and the 200 are all down there around that freaking 60-20 mark.
And 63 on the 5 minute right now.
Mm-hmm. We'll see if I'm right. I'm not going to take a guide. Dang it. I hate it when I doubt myself.
I'd help you doubt yourself.
Oh, in another year I'm going to be a badass.
Yeah. I see it coming already. You're a lot more disciplined than I was when I first started. And you already have a strategy. See, I just traded what I thought was a support and resistance levels, and VWAP, and all kinds of other kinds of stuff. But if I'd had the strategy I have now when I first started, God, I'd be worth millions. I didn't really start making money until I started this channel here, and
Jesus Christ. Somebody's paying the asking for freaking 67 for 60.75 for tomorrow. 107. What is this 1.18? 60, 60. Alright, so those 60-20s were 70 cents when I freaking said I was going to buy one. I want to see what it is at the end of the day. I can kick myself in the ass all the way to the pool.
they were at what?
They were at 70.
That's where they are now.
Are they?
They're at 80 now.
That was $1 or something.
I sent a message to Vegas that said, "Don't drink prune juice while you're trading." She-
It's $1 again.
Woo! There you would have got it.
Yep.
Todd.
$2. I don't pick that myself.
You got to. You got to. That's one thing I always tell people. Just second guess yourself every single trade. Measure twice, cut once. But you see me though, I jump right into them sometimes without even thinking.
So that was a, let's see, 70. That was a 250% trade. Went right down and bounced off the 63 on the 5. Oh, that's a tweezer bottom on the 5.
And that's a pretty good spot. On the 1 minute, it's also a tweezer bottom on the SPX off the 200s. We got 14 minutes left. I'm just going to relax. I've had another 0 loser day and another 22,000 left on the table.
When you say it like that, it sounds bad.
I know it.
I think you need to work on your presentation.
Probably. I was happy to get out of that. I was in it so long. I mean, God. The excitement of getting, of it popping. I'm going, yeah. $1,000.
Here we go.
$1,000 is still a lot of money. I mean.
But there's the volatility.
Oh, I was wondering what's going on. I was looking at the put.
Yeah, there's the volatility I was talking about.
Yeah. 9 more minutes and I'm off to recycle. I used to collect my cans and throw them out in the front yard, and the homeless people would run by and pick them up. I can't do that where I live now. I used to sell them too. When I first started, I put them in the garage and then take them once a month or every couple months. Now I just drop them off at the bin. Well, that was a nice little turnaround there. No, I guess it wasn't. I was looking at something else. Unclogged the drain on the inside and shampooed that rug. $205, wow. Bounced right off the 200. Perfect. That's 100% right there, or more. Went to 30.
Yeah, It went 60/30s have gone from $1.35 to $7.
Yep, the 35s I was watching went from 35 to 220 or more. But I probably wouldn't have got 35 cents. I don't know. It would have been close, probably around 50 or 60. That second tweezer bottom on them 1 minute candles. Now they go to 3. Oh hell yeah, that'd been 600-700% right there. God, we just make money. That's all we do around here.
All I do is win, win, win.
Trump's got us winning.
All right, I'll see you tomorrow.
All right, well, appreciate your help today
Yeah, man.
and showing me how to turn that down. That's going to be a big help. That volume down. I like hearing it, but you know, it when it catches you off surprise, it really messes with your head. Because it's so loud, but no, it's not that loud no more. All right. Marriage is no laughing matter. Did you hear that, Magnificent? I had a girl come up to me one time and said, Jim, will you marry me? I was at a bar one time and met this girl and we hung around a little bit. And the next day I get a knock on the door. My mom wants to talk to you. I said, what? Yeah, we drove around all around town and we found your truck. She's out waiting in the car. She sent her daughter to go to the door. That's a big no, sir, no, sir, no, sir, no, sir. Randy's heading to the bar. He got so much money he don't know what to do with it now. So I'm going to get out of here. It was a good day again today. It could have really been a terrific day. I mean, 97 cents, 95.7 cent, 5 cents, all the way up to, you know, and you get out at 150, then you chase it up. Think, oh, it's going to stop here. No, it's not. It's going to stop here. No, it kept going. Then you jump in it, and you can only afford one call. In that last trade of the day, I could have paper traded. Went to 420 at close from 35 cents. The 60 35s. So it was sometimes the boringest days can be the most funnest days. Then the knives came, that big old fat knife I got stuck in. You know, that could kill someone's account right there. So you got to be careful. I mean, it's not like that every single day. That's why I always add it on. I mean, I couldn't tell you how much money I've lost just selling at a knife and then watching it bounce back up and go, shit, I wish I'd have held it. I mean, so many times you get sick of it. I'm talking over thousands. All I'd take $50 loss. All I had to do was hold it, and I'd have made $500. $100 loss. All I had to do was hold it, and I could have made $300. $10 loss. All I had to do was hold it, and I could have made $1,000. Then I realized that things like to retest. You know, for example, right here, you get a breakout, it breaks out, you decide to jump in it halfway, and all of a sudden it comes back and it retests. And I show you that all the time, how they retest the old resistance out of them patterns where it pulls back and hits that resistance line. 9 out of 10 times, or 49 out of 50 times they retest. So I've learned, kept watching that happen. I'm like, jeez. And then Vegas getting on my ass every day. Why you sell? Why you sell? Why did you sell? And so I didn't want to take a bigger loss. And then they end up bouncing back. You get in bad entries, and then there's no hope for you. But when you trade like I do, and you're buying at support, or try to buy it at support, or you think you're at support, or you're getting ready to squeeze, then I got to mastering the squeeze. So you're getting ready to do something. You can tell by the candles after you watch them so many times over and over again. You hear Funky starting to pick up on that. And you can tell by the candle pattern that something's going to happen here real soon. And paper trade them. You don't have to always get in them. And then so many times after you do that, you say, well, I need to start getting in these things. If I can call them out like that almost every time. So, good job, Bobby. So let's go ahead and call it a night. I got to go recycle paper and buy some paper towels before it's too late. Last time I got there right at 1 minute after 4 and they were closed. So, adios, amigos. YouTubers, take it easy. As the Eagles would say. Good job, Robert. See you later, S. See you later, matey.